Wait a second, say something? That's hilarious, bro.
Testing.
Okay, now they hear you. I'm fucking dead.
Wait, they could hear us before that?
No, I can't,
Oh,
bro. I'm done, bro. I'm not good at this shit, bro. I gotta give up. Golly,
W or
why?
L, Chef?
Okay,
no, you're not real, bro.
I'm not real,
I
bro.
swear you're
How
not
did
real.
it? How did it? Okay, okay. This is just
How
embarrassing
do
at this
you even
point.
manage, bro?
What? How do I even recover from this, bro?
We're 48 minutes into the stream, man.
All
We
right.
got some
Well, we're starting
nice
from
far
now.
stuff.
I don't care. We're gonna upload this episode, which is gonna be a shorter episode, whatever. Or we'll go longer. I don't care. We're starting now. Welcome everybody. Fuck it.
Okay, bro.
Golly, this is
Welcome
ridiculous.
everybody. Fuck it. I'm crying.
Ah, damn, I'm sweating,
All
bro.
right, wait. Let's start it
I'm
now. Let's start
sweating,
it
bro. This is ridiculous.
now. No expletives.
What?
No expletives this time.
What'd you say?
I'm like, let's restart it. Just with no.
Well, yeah,
cursing.
we're starting now. It doesn't matter. I mean, like, just for the people that like watching the video now, we select a few other stocks. We selected U, which is Clear, which is security system for airports and like identity security, and then we added TSM to Taiwan Semiconductors, and then we were discussing other names, but we haven't progressed any other things. So apologies for the fact that for the second time I messed up the mics.
I've actually seen how they sell this product. Clear.
Yeah.
They come up to you in the airport and they're like, "Do you want to skip the line for free?"
Mm-hmm.
And they bring you to this little computer. You enter all your info in,
Yeah.
and they're like, "Okay, we gave you a free trial of Clear. You can go ahead and skip the line, go through the Clear, side entrance."
Yeah. Maybe that's. I mean,
It just lets you skip like one line in the airport, basically.
I've always seen it on the airports and stuff, but I've never done it. But I feel like it's something that, like, yeah, it just continues to grow. They probably will do more and more partnerships. Like, it does make sense that people end up just only using this, because what is the point of? But then it's like, what is the point of the service itself if everybody's using it? Because then you kind of skip the line, right? But it does make the line more efficient, I suppose, because you don't gotta do as much. Yeah. So yeah, in general, it's just a more efficient way to run TSA.
I do prefer pre-check still,
But this they offer that too. It seems TSA pre-check, enrollment provided by Clear. But I just assume these people are diversified into like doing the same tech for other things, not just airports, right?
So when you guys left off, you were saying something about 4 billion being
Oh
how
no,
much this company's worth or something.
not yeah the market cap, but yeah, that's because there was some confusion on how like this website here shows the market cap. But yeah, it says 4 billion. Okay.
I'm honestly gutted, bro.
Okay, yeah, we'll look more into it. I'm not that bought into the concept because it seems a little bit like they don't have a much
There
of a
were so
moat.
many good flips in that first 45 minutes, man.
Oh, okay, yeah, yeah. Bring it up again, bro. I was getting over the sweats already. Okay, so Dynatrace. I mean, I think definitely I'll add it because I want to look more into it just because I've done work on them before.
Evan, lock in, bro. We didn't even really talk about the company yet in that whole 40 minutes.
Yeah, I'm the one that wasn't locked in.
Yeah, unlocked.
Bro, we were on a tangent anyway, bro. Now we're back at the company.
What tangent? We're not no tangent, bro. We just tangent.
Bro, what do you want me to do? Travel in time, my guy? What do you? I messed up the mics, okay?
Just carry on.
I'm trying to carry on.
As the British say, you know.
Camtech, what is this? Inspection of metrology equipment for semiconductor industry. Oh, this we started looking at this, didn't we? The other day when my mic wasn't working. Advanced packaging market using software and hardware technology that was superior to the
triggered me all over again, dude.
No, I don't know what I said. Golden Eagle. So this is like, yeah, like kind of the thing with ACMR, like a part of the process in the semiconductor. So yeah, but you shake your head, bro. But like, check this out.
Shaking my head. This is a British company.
Okay. Yeah, but this is high, right? You were saying? Yeah, I see. Price to earnings at 35.
just go to their statements, man.
Okay.
What's their market cap? Nah,
Uh,
I'm sick to my stomach, bro. You don't
I
understand. I bet I'm
don't.
so.
4.24 billion.
Okay, let's go to their statements.
Oh boy.
Oh, they actually earn money. That's good. Growth stalled in 20. Wait, go back
Oh.
up. Why did growth stall? That right there immediately a red flag for me.
Yeah, man. I mean, just
What do you mean?
wasn't this COVID or some shit?
Yeah, okay, sure. It might have been. No, it
Oh, but
wasn't
I
COVID.
didn't stall. It went down. Yeah.
Yeah, it went down. And for me, at
Mhm.
10 times sales, it's like, what are you doing not growing
Well, this is
anyway?
probably the 10 times sales because they bounced back.
They're also not a software company because
No, they're not.
why are their gross margins
They said it. They're
low?
hardware. Like we just read it.
Okay. Hardware company at 10 times sales. Okay. Sure.
Well,
That's fair
semiconductor,
enough.
whatever. You know.
Yeah, yeah. Exactly. At 10 times sales.
Okay. Okay. Yeah. I'm not.
130
I'm not. I'm not.
million.
I'm not. Yeah. I'm not like buying it or anything.
I'll
Like
tell
I'm
you why.
not.
I'll tell you why. Look, if you go to their cash flow statement. It's gonna be way worse. Why'd you close it? Don't. Yeah, go to their cash flow statement. They're gonna be cash flow negative. Oh, they're not. Why?
Well, free cash flow. No, they're not. Right.
Wait,
Well.
this is the wrong. This is the wrong thing. Go up.
What do you mean?
This is the wrong thing. This is go back down again. Down just a little bit to see. Yeah. This is all right. Stay here for a second.
You're
This
just
is
wrong. It's fine, bro.
quarterly.
No, it's
This is
annual, bro.
quarterly. I'm not wrong. No, this is quarterly. No, you know why? Because sometimes on Schwab, what happens is it loads up the financial data for the last thing you were looking at by like accident, and it looked kind of similar to the thing we were looking at just now, the clear
That's
secure or
okay.
whatever.
That's okay. We all mess up sometimes.
Um, no, but see, it still doesn't make sense. Why is their depreciation expense so low if they're a hardware company?
Is it
Go
low?
to Roy. Real quick. Yeah, it is low. 10 million only. Go to Roy. Go to Roy.
Yeah, yeah, I'm
Go
in
down.
right. It just takes a bit. What's the ticker for these people?
Oh, my bad. I'm looking at the stream. I just realized. Alright.
CAMT.
Oh, it's international. Forgot. Go to their investor relations. Where are they based out of? Netherlands? Oh, China?
Israel. Oh, nice. Hey,
Okay.
Migdal
Go to their
Hamek.
investor relations. Financials and filings. Damn, I hate reading income statements like these, bro, when it's like they don't have to abide by certain like requirements.
Annual, right? But they do. SEC fine. They have to abide by things if they're in the American
Alright, so
markets.
go to their SEC filings.
Yeah, here it is.
Yeah, but I'm saying they don't file a 10K, they
Yes,
file
they
like some
do.
weird
I'm sure they do. No?
check. No, I don't think so. I think 10Ks are only for domestic companies. They file something that's like the exact same pretty much. It's just not like cookie cutter. I don't know.
Let's see.
Yeah, check it out.
Is it this guy's? Optical instruments and lens? No, what the hell?
Yeah, why are you on Edgar? Just go to their page, to their SEC filings.
Yeah, but I. Oh, I see. My bad. I thought that was the one I opened there.
So
Six
like do
Ks.
reporting.
No, but wait.
Yeah,
Oh,
they file.
filings.
They
No, one
file
second, one second. Annual
annual.
filings. 20F.
Yeah.
And they only have one? Wait, no, no. Calendar year 25. 20F. I see. So what is that
Yeah,
for foreign securities?
yeah, exactly. And it's fine. It's not bad, but it doesn't follow the same
Oh,
um Like, you know, it's weird. It's like weirdly made. Anyway, go to their financials here. Like their financials at the bottom.
Yeah, I'm at the bottom. It's just I went through the index. It's just now
It's
I'm
just
going through
growth.
the notes. Yeah.
Anyway. Right. Okay. Perfect. Now go to their income statement. This is for you're looking at the wrong year, I think. Oh wait. Yeah, you're looking at the
2020
wrong
is
year.
another last fiscal?
I
Maybe
think
maybe I
24.
am looking at the wrong one. One second.
To the left, dude. Oh,
Wait, is it another wrong year? March 21st, 2024. You're probably the wrong year. But March,
they
yeah,
filed
so
them in March of they're
yeah.
about to file it right now. They're about to file it right now. Okay.
No, here
So
it
this
is.
is
Here it is. March 19, 2025. This is the one.
yeah. Good. All right, good. So now go back to the thing at the bottom.
You want cash flow? No, income, right? There we go.
No, well, yeah, I want cash flow too.
Okay, here it is.
All right, so it's like the same thing. Basically, their revenue stalled, their net income also stalled, and now it's growing again. Sure.
Oh, yeah. Yeah, I
Still,
guess we can look
would
into it.
be, yeah, this would be like 30 something times earnings. But yeah, go down to their cash flow.
Right, I'm trying.
Is this in check in schmeckles
Schmeckles, no, it's
or
in
is it in dollars?
dollars. Schmeckles. What do they even use over there? Yeah. I think they use dollars?
I don't know.
Yeah.
Good question. Yeah,
Oh,
so it is. So it was all accurate. So they're doing around 120 million in cash flow from operations.
yeah, Evan, like W
There,
dog.
With the depreciation being 10 million, which is what you were concerned about.
yeah, which is pretty.
Maybe they
It's
like
solid,
don't
right?
actually do the manufacturing. They're like kind of like a designer of the equipment type of thing. That a lot of Israelis like do that, like the
Oh
companies
wait,
and stuff.
Simon has a dog on the screen, dude.
Simon? Oh wait, is that I don't have his. Oh, there it is.
Yeah, that's an ugly dog. No
That's
cap.
some floppy dog. I mean, I don't know. That's like a hunting kind of a country dog.
Bro, not.
He's W sleeping.
Who is that? Mastiff?
Yeah.
Yeah, that's a good guard. Does he bark?
No, he's very calm and
Oh, that's
he's
sick.
sleeping right now. He's always sleeping, to be honest.
Seems like you probably like have a lot of what is that called? Like saliva shit.
Why are you worrying about his saliva, bro?
Just loving
Why,
around, you know what I'm saying?
why are you worrying about another man's saliva, bro?
Facts. All right. Yeah, it's not cheap, and
Yeah.
the growth is not really there. I mean, it is kind of, but it's a weird one. It's a weird
Also,
one.
they buying shares of companies and things.
Yeah, I'll leave it up to you.
I like how bro did the mental math on the price earning.
No, this is not.
Yeah, it's like 30 something times.
That's what it's valued at right now. 30 times earnings.
Yeah, which it's gonna show it here too. Look good. It'll show it.
Wait, what are you trying to see?
The earnings. It shows if you just keep scrolling down.
Okay, I'm just reading this thing on the
Yeah.
right. But yeah.
Apologies.
I'm about to
Yeah, right
switch
here.
to my PC so I can see better.
Yeah, look, 36 times trailing 12 months.
Yeah.
Good
Yeah,
math.
no, I'm not. Yeah, I'm not interested. Dynatrace, I am already added it, right? Yeah.
Oh, good. We look at it.
InterDigital.
We didn't look at Dynatrace, by the way.
Huh?
We didn't look at Dynatrace.
No, but I just mean I want to look more into because I've done the work on them. I know the sector in general is good, observability. I just don't know. I mean, if they show up on the screen, I wonder. I mean, I'll look at comparables too that might be cheaper. Probably they're not cheaper, so it's not a cheap company. but they have good metrics in terms of growth. And I think I'll just have to check the reports that we had too as well. But yeah, I think they were good.
I added to the Excel.
Huh?
I added to the Excel.
Yeah, I added it. I added it. Okay. IDCC, InterDigital. Wait, let's see first. Do they have anything? They're growing more and more. EPS growth is good. Price to sell is that's not low either, right? But price to earnings is 18. Well, it's like low earnings.
Yeah, that's pretty good.
Let's see. Oh, look.
There's gotta be something in here.
Global
Yeah, it's
research
nice.
and development company focuses on wireless, visual, artificial intelligence related technologies. The company engages in the design, development, and technologies that enable connected in a range of communications and entertainment products and services. What the hell? So it's like networking of devices? Yeah, IoT. A range of digital, cellular, and wireless products and networks. Yeah, so yeah, like communication infrastructure. Yeah, I think this is good, and at least qualitatively.
Yeah.
Do they have a Morningstar? No.
Uh,
But let's see those. Oh, they have a dividends too. What the hell is
60
this
billion.
company? I thought this would be like a less mature company.
It has to be like just a small company. They're not young. I think they're just small. They just operate in a niche,
5.9 billion. Yeah, it's not big, but it's not small. Small.
Oh, it's small.
Look, yeah. I mean, this has accelerated, and it's not
Yeah,
like yeah, they
remember
never slowed down. Really, that's good.
yeah, go to the quarterly.
Yeah, definitely cyclical.
Yeah.
But
Well,
yeah, I see. I mean, year over year, I suppose they have slowed down.
I mean those comps are like tough, bro. Why did they grow so much last year?
Yeah,
Those tough comps. They
I
probably
don't know.
signed a big contract with somebody.
Expenses went down though.
Yeah, that's good. Income went up, which is nice on that less money.
Yeah, yeah. This I like it. Yeah,
Yeah, go to the cash flow.
yeah.
Make sure nothing is out of the ordinary.
Nice. They maybe acquire something here, and still they held
They're
good cash flow.
not great. They're less than their income.
Damn. Yeah, but they just
They
had
have
big
massive
purchases here.
they have massive depreciation expenses.
Well, I mean, they do have a network infrastructure. It's not
Yeah,
massive, is it? 70 million?
it's a lot, dude.
Is it?
It's
Okay.
depreciation of their assets. It's a sign of a lot of other things too.
Also, it's going
Probably
down.
yeah, it'll go back up. Go to the quarterly, it'll
Well,
probably be
yeah, of
higher.
course it will go back up. We can also check like accumulated depreciation. Where is that? Is that like what,
Yeah,
liability or assets?
their equipment probably needs like a lot of servicing and a lot of like changing up.
Yeah, wait, how
Like
is the property and equipment in general going down? Machine equipment, oh, they're just moving it up to here, to machinery. Property, okay, there it is. Accumulated depreciation, yeah, I mean, it's not fast. Like, it's not depreciation super fast, but yeah, you're saying eventually it will? I don't know, I think it seems like they're maintaining it well.
if if they're booking 70 million or more of depreciation every year on a base of income of like 200, 300 million, it's like a little bit, it's a lot, dude.
Well, yeah, but I don't know why it doesn't add up to the accumulated. So I guess because they're replacing assets constantly?
It's the total difference
They
is the
gotta be.
accumulated.
Well, right, because they're replacing the assets at
And
like,
it's actually not even accumulation, it's depletion that is the bulk of it.
wait, what?
Like if you go back to their cash flow statement, it says depreciation slash depletion. It means that it must be depletion. Actually, that's the bulk of all that.
Oh,
So they have resources that they purchase that deplete in less than a year or in a year.
no. I think it has to do as well with the balance of like if they are if they are renewing the equipment, then the accumulated depreciation will go down. So if they're depreciating by 70, but they're putting 15 million into new equipment, then it's accumulated remains the same. Or if they put the same amount, then accumulated doesn't go up. Like if they're investing, which they are, like
Yeah.
capital expenditure
Difference. It's the difference.
and
But I'm saying like,
purchase.
why is depletion like what? Okay, so I'm not exactly sure what depletion
No,
is.
me neither. Me neither. Me neither. But I'm just saying, I think it's not super irregular what they're doing here, which is that they just, I mean, they maintain a network of like an infrastructure of communication between devices. So it makes sense that they gotta modernize the equipment and that they have a depreciation to take care of. It's just part of their business.
boys.
Depletion is the accounting method used to systematically allocate the cost of extracting natural resources. Depletion applies to assets like oil and gas reserves. So what kind of reserves do they have that are getting depleted?
I mean, just
Like,
because it says this here, like this is might be Schwab even, like, but we can check
no,
the.
but they're like, yeah, but they're combining them. I don't usually see that as a combined thing.
Let's see.
What's the company's name?
InterDigital. Wait, did we check this on ROIC? We can also check their calls and stuff.
Specific accounting treatment of impairment of certain assets. While the term depletion is traditionally associated with the gradual exhaustion of natural resources, in accounting it's sometimes used in a broader sense to reflect declining asset value.
Yeah, in their whole 10K, they don't mention depletion once.
InterDigital, oh, okay, but it's a patent licensing company which has significant intangible assets, including patents, trademarks, and goodwill. Okay. But they're probably customer. Okay, maybe it's not, but they're saying essentially that they are
The
patent
what?
dependent. They are patent dependent company.
Well, yeah, I mean, if they have IP, that's not. So what? They're patent dependent. Oh, you mean they depend on other people's patents, or?
Yeah, like they patents have to be renewed or like they
Yeah,
expire.
licensing. Look here, operating
This may be wrong.
expenses.
I don't know.
No, yeah,
Anyway,
look, the fact that they break down operating expenses a huge amount just on licensing. Yeah, like they depend on other people's licenses, other people's patents. Yeah,
yeah, and then I think if there is depletion,
sure.
it would be that, but they wouldn't call it that.
It's not depletion though, but yeah, let's check what they call it here.
You command F, yeah,
I
exactly.
did. Look, depletion.
Yeah,
That's why I was saying
and
this.
I'm saying they wouldn't call it that.
Depreciation and amortization, they just call it. This is, I mean, if it's licensing, it shouldn't be in depreciation and amortization because it's not their assets. So it's not gonna be included there. It's just an operating expense. So in any case, it's
Yeah,
actually better from your standpoint, which is you don't want to have the depreciation. They don't because it's not their assets.
ChatGPT just said that sometimes they call depletion something that it's not. You know, that's why I mentioned it.
But I don't know why you're stuck on the depletion thing. If the company itself in their finance are not calling
No,
depletion is not common to this sector.
uh, brother, I don't care. I'm not stuck
Well,
on them.
right. Well, okay.
Just
Call
say
it
we
what you
can
will.
move forward
Customer deposit of 76 million. Damn, what is this customer? I guess we could. They probably have some concentration.
for sure.
Global
I
research
mean,
and development
partner
company.
with larger companies, I assume, no?
Yeah, I assume. I don't know. Yeah, I mean, to me, it's interesting enough to look more into it.
Okay.
And it's like a good price, you were saying too. So
It's not a good price.
no. Oh,
Oh wait,
maybe it
it is
was
a good
me.
price,
Yeah.
but it's comps are going to be extremely difficult
Well, but they already
They're all-
didn't meet those comps
for one quarter.
for one
It's
quarter. And what
yeah,
did that
it's
do?
gonna,
Yeah, they didn't. They handled it well.
What's the ticker?
IDCC. I don't care. Yeah, I mean they just. I mean they beat earnings by 15%. That's probably why. Wait, so the estimate was already lower because of the comps, I assume.
Yeah.
Yeah, and they beat it. So
Uh,
they're gonna have earnings soon. Yeah, they're gonna have earnings August 1st. So
yeah,
we
we're
can
going
check
into
it too.
earnings.
Nice. We'll see how it does. It might
When were
even
the
become
last earnings?
cheaper. The what?
When did they announce last earnings?
Uh, May 1st. Man, these people are on time every time. Oh no.
Wait, no, May 1st?
Yeah. Look, I just checked the last year. They did August 1st, 2024. But yeah, I mean, they probably already announced the date. Let's see.
Yeah, but I'm saying like their last earnings. They
Yeah,
announced them on May
May.
1st, or
No,
it's
they had
May
earnings last time in May 1st. First quarter of 2025.
is when they announced it.
Yeah, I don't know. Yeah, like, you mean announce the date for the next earnings or when they announced earnings? When they released earnings, yeah. May
Yeah,
1st.
when they released it. Okay.
And the next
May
earnings date is July 31st for fiscal quarter ending June.
company? So we said five, like
Hmm?
5 billion.
Yeah, 5 billion and so. Yeah, 5.9, 6 billion.
Yeah, okay. They beat. They surprised by 13%.
Yeah.
Price changed on that day by nothing, basically. Yeah, I mean it didn't go down for sure.
Yeah, then it
Since then, they're
steadily.
up 12%. Right. Okay. Sure.
Yeah, and they maintained
Sure.
their dividends and stuff, and then they raised it. Yeah, I like it.
They, yeah, if they like, even if their revenue comps are tough, if they continue to grow their net income, then it'll just get cheaper. It's not bad, you know.
Yeah.
It
Okay.
just confuses me, like how their revenue can jump so much and then, but I guess maybe if they're reaching a new base of revenue, their different customers that they added on, then they could
Yeah.
grow more from here, you know.
Yeah, and then I guess we will look into the customer concentration because, yeah, if they don't have many customers, then they gain a big contract. And we saw that thing with the
Yeah,
customer deposit. Maybe that was part of that revenue growth.
yeah, you should ask ChatGPT, why did their revenue jump so much in that year? And it would kind of give you some insight.
Last year, was it?
Yeah, between 23 and 24. Tesla second quarter free cash flow, 146 million versus a 760 million estimate.
Within the 4 years ended December 20, the total revenue jumped from 550 to 869, a 58% increase. The surge was driven almost entirely by accelerated licensing momentum across its smartphone, video, and IoT. So they also sell licenses, right? Like their main services, not just catch-up royalties in smartphone licensing. Catch-up revenues rose to 135 million from just 2.2, driven by new agreements signed with the world's major device makers. Smartphone revenues from the quarter climbed. Oh, so these people are doing like 5G and stuff for like antennas for phones. Landmark video IP agreements. Building its R&D in video technology, InterDigital closed a landmark license with Samsung to embed its video IP into Samsung TVs. Added significant non-recurring revenue and underpinned the company's guidance for another year of strong growth. Well, right, the fact that they signed Samsung in 2024. So that's going to be good. That's
Yeah.
sustainable. Burning to C and IoT outer segments. Consumer electronics and IoT.
Alright.
The company's growing patent portfolio.
Good
Yeah.
enough for me.
Yeah, same.
Good enough for me.
Uh, TSS is the only one that we haven't checked yet? Yeah. What is this? Wait, let's first see. IT and consulting, 30. Well, yeah, that's some crazy growth.
By the way, Tesla's on
Boy.
clap today.
Oh yeah. Oh, because auto sales, right?
Yeah.
I saw some news. Yo, look at this, bro.
It's not just auto sales, like they're
Oh,
less profitable. It's crazy.
price to
They
sales.
did a
Oh, sorry.
hundred. Yeah, go ahead. Sure.
No, no.
I'm
Tell us
thinking
the
about the
news.
clip. I'm thinking about the clip, dude. The virality.
Oh boy, the virality.
I'm joking. I'm joking.
No,
Go
but
ahead.
tell me though. What is it with Tesla?
They were expected to do. How big is? Hold on. Tesla, which is a trillion-dollar company,
Mm-hmm.
right? Was slated to do 700 million in free cash flow for that quarter.
Uh-huh.
It did 140 million.
Damn. What the fuck? That's a lot less.
Yeah. It's horrendous. Automotive sales down.
Yeah. People.
Automotive regulatory credit doesn't matter. Total automotive revenues down significantly in the 6 months.
Yeah. It's like
Down from
what
37 billion to
huh?
30 billion.
They just made
More
everybody
revenue.
their enemy.
It's not even that, dude.
You don't think?
It's like when you put a dress on a pig, it's still a pig, you know?
So you don't think Teslas are good cars?
They have good cars, but it's like so does Toyota, and Toyota
It doesn't charge so
is not
much.
trading at 1,000 times forward earnings. And on top of that, it's like their big claim was that they have the best automotive margins industry wide,
Right.
right?
Right.
Which people assumed was because of automation and all this kind of stuff, but in reality, it was never that. They
Right. It
were
was
taking
the
a car that
yeah.
was supposed to cost 30,000 and selling it for 60,000 because it was like the first of its kind. It was like the first really good, viable. But as time goes on, their margins are gonna pretty much shrink to the industry wide, which is
Yeah.
5%, right? And then sales can't just keep exploding, obviously, because we're at kind of like a saturation point with Tesla. Especially, I mean, here in New York, it's insane how many Teslas there are, you know?
Really? Oh.
So yeah, yeah. But every taxi these days is a Tesla.
I
Like
guess it's
every
very
taxi.
convenient for cities, right? Once you have the infrastructure to have an electric car.
It's also the most common, like, look, what's the most common car in New York?
No way. Nah, it's probably a Honda
Yeah, yeah.
Civic, bro.
The most common cars in New York State specifically are Honda CR-V, Toyota, but yeah, but which is oh, yeah, so it is these ones, but hold on. I saw an article that said that like it's like the most sold car or something.
That I can believe, I guess. Like sold like new cars. But I
Yeah.
mean, even that sounds like a lot. They're expensive cars. But yeah, I mean, the thing here, I think the thesis is the fact that it's not just a car company, you know? They're like, well, the robotaxis are gonna come into play. There's the software fees, like they're gonna be the new Uber.
Yeah.
Like that's the thesis. I'm not saying I buy it. And also, like, yeah, I mean,
Yeah.
it's like they should get clapped in general, bro. They're 175 P ratio, and it's a auto company, like, but they're not, right? Like that's the whole whatever.
They're not yet. That's that. Like what is when is that gonna happen? It's been saying that that's gonna happen
Yeah, I
for
mean,
like
they
six
they
years.
didn't they start rolling them out though, like in some places, like now robotaxis for Teslas. I saw there's something about that.
No,
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 yeah,
Waymo is beating them to market. Waymo is the one
no, not
that's
for sure.
properly doing trips.
No, bro, they definitely have done some trips already. Robotaxi demo
Tesla
fails to impress
Robotaxi.
Austin. So they did some demos in Austin, though.
Yeah, demos. Yeah, sure, but they're not operational. They're
Right,
doing
right, but
demos.
there is progress. Look at this. Elon Musk with a straight face. Tesla Robotaxi will cover half of US population by end of the year. Bro, this guy definitely is a capper. Like, I like him. I still think he's a great entrepreneur and whatever, but he definitely speaks out of his ass a lot. Like, add half of the US population by the end of the year. Like, how does that even add up?
How crazy of a statement that is in
I know,
less
that's what I'm
less than
saying.
a
Like,
year.
why would he just say that? Like,
In a year. In less than a year. Like they're already getting beat to market by Waymo. Waymo is crushing. Waymo's doing trips. They've done. I think they crossed the 1 million trip threshold already, and they're
look.
partnering with other companies to expand in different markets. Like I'm pretty sure they're now in the summer. They're supposed to be launching in Austin and in one other city. I forget which one. Like
Yeah. I know this is laughable. Who believes that? How can Elon say that with a straight face when Tesla only has a joke of a system that requires supervision at all times? People are going
Yeah,
hard.
Phoenix, Phoenix, and Austin. So they've done. I think they crossed the 1 million trip threshold in California,
Uh-huh.
and then they're launching a program in Phoenix and in Austin.
You're talking about Waymo, right?
The program. Yeah, Waymo's introduced a program allowing teenagers aged 14 to 17 to ride in their autonomous vehicles, marking a unique expansion into a younger demographic. Austin expansion. Waymo's not in Austin with the service covering a 37 square mile area. Oh, and then Atlanta too. That was the other one.
I mean,
Waymo's
the thing
partnering with
with me, like for me, Elon, like I don't really care what he says. Like, he's always gonna say these things, like just always speaking in like, "Oh, we're gonna get it done. It's gonna be great and big." I
Yeah.
think the guy puts the work in. Like he does deliver results eventually. So it's like I'm not gonna buy the company, but I do think they will get there one way or another.
The results eventually. What results? What are you talking about? What
Like
he's
they
done?
will have rolling robotaxis, and they will be competing in the market. I don't know what market share they'll have. I don't see
No,
why they wouldn't have a.
you said he delivers results. Like those are not results. Those are still promise. Like what are the results? It's a car company. He doesn't do anything else right now.
Yeah.
Right?
No, they do.
He
They have the
doesn't do
superchargers. A lot of other companies use their supercharger infrastructure.
Yeah, the charger network. That's part of the car thing, right?
Sure. I mean, then at that point, it's not just a car company, but okay.
Sure, okay. But like in terms of the robots, uh
Yeah, again, a
self-driving
lot of
cars,
promises, but it's like he made those promises not long ago, like relatively. He
and
just.
mind
Uh-huh.
you, right? The whole thing, where this ties back to is that my biggest thing with Tesla is their margins, right? Because again, it's
Hmm.
growth can be there, right? It's not there right now. Let's just say it gets there, and then all these things come to fruition.
Yeah.
Those things are not profitable right now. They're profitable at scale,
Yeah.
but they're not like Waymo doesn't make money right now. Even though they have 1 million trips and they're fully operational, they're
Yeah.
burning cash because these things are not profitable right now. So in a scenario where in the past you could say, oh well, they have the best automotive margins, they're growing revenue quickly, they're printing cash, they can afford to go into these new avenues which at scale will be extremely profitable,
Right.
but will not be for many years, right?
Right.
Operationally, we're not even there yet. But again, like they're saying, if Tesla was what it said it was, they would have the money to burn to get to these places. Now it's a little bit trickier because if you're operating at regular car manufacturer margins, right, and then you introduce all these new businesses that burn money, right, that makes it so that you're losing more and more. Like your margins are contracting before they expand, right?
Mm-hmm.
It's a shitstorm. Like I promise you, it's
Nah.
gonna get to the point
Nah.
where they're gonna have to issue debt. They're gonna have to issue a ton of debt to fund all of these things as
So
they
what?
keep
I
as
mean,
they go
again,
on.
yeah, I don't know exactly what perspective you're looking at it. Like, if you're looking at it from an investor perspective, I agree with you. I don't think one should buy shares of Tesla, but I'm saying qualitatively, I think yeah, they'll do whatever it needs. Like, they'll raise more money, they'll do whatever, but they will get to that scale. Like, I do believe they will because they're in the right direction. They have the right people. Like, they have good people working on it. And he's determined to get it done. And it's like, it doesn't, like, to me, things like this that is like building on software, it's like, sure, it might be hard to develop, but once you do, it's like what you're saying, it's extremely profitable at scale because he already has the cars rolling out. Even if the car auto sales slow down, these people have the cars already on the road. So these people, when this feature comes out, they will pay to have the robotaxi, they will pay to have autonomous driving, and now you have great margins on a software that can be instantly deployed on each one of their
Not,
vehicles.
it's not only software, dude. Like
How not?
building, like building an actual, like it takes so much money to operate a fleet. It's not just software because it's their cars. They're operating
No,
their own cars. They're not selling the car. Yes,
they are selling the
all their
cars. What do you mean? The cars are
the
people's
vision for
cars.
Tesla Robotaxi is
Uh-huh.
that they own a fleet of vehicles and then they give rides for money, right?
I don't think so, bro.
That what is it then? They're gonna
that the
license
that
what?
the
What are they gonna
owners can put their cars. That's what he said. That the owners can use their cars and make money for them. They're like, whenever I'm not using my Tesla, I can put it on the app like it's an Uber, but it just drives by itself. But then I'm sure they'll
no.
also roll their own. Why wouldn't they? But that they don't need to do that yet. But the whole thing is
Well,
that it's
it
a
will.
software thing. That's also
It's
why they
not
don't
gonna.
use. Sorry, what?
No, no, it's not gonna. It's not gonna start by saying that if you own a Tesla, you can lease it to the robotaxi. That's not how
Yeah,
it's
it
gonna start. It's
is.
gonna start with them. No, 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 not at all. You'd have to get people to agree to that, and then
Right,
insure all of those vehicles. No, it's gonna be them using their own cars
bro.
and building their own robotaxi network.
No, the robotaxi network is eventually
100%.
expected to work with all current Tesla vehicles, but it's focused on two new autonomous-only vehicles, the Cybercat and Robovan, which would also support the Model 3 and the
Yep.
Model Y for owners who choose to allow their autonomous-capable vehicles to participate in the network. So it's like I'm sure they also roll out their own vehicles if it makes sense financially, but the whole goal
Well,
is that
part,
they.
the first part is the whole thing. It's like the developing vehicles specific to that.
No, no,
They're
no, no.
saying also, yes, it's saying also they will add the capabilities to
Right.
Series
Well,
and Y.
that's the scale I'm talking about. I don't know if they. I mean, it makes sense that in the development process of that they'll roll cars, but the point, and that's why also they don't use like lidar or anything like that, is to use cameras. So the software is much more complicated because it has to deal with all those issues with camera footage. But once you get to a software smart
You're
enough to be able to.
you're never gonna get to a stage
What?
where you're never gonna get to a stage where you're gonna convince a person to lease his vehicle to a taxi network, to have
You're
people in
serious.
his vehicle.
What?
Yes, bro, I have a Turo business that
There
I
you go.
run. It doesn't, yeah, but it doesn't happen. Like, it's first of all,
Mhm.
it's again not a high margin business for them. They'd have to pay out, right? Second of all, if
What?
you're not a person that's building a business in that, right? If Tesla, if you're not
Uh-huh.
buying Tesla specifically to lease them back to Tesla for the robotaxi,
Uh-huh.
right? You're not just gonna have your car, your personal car, on the network. It won't happen. Like there's
I
gonna be
think it
very few people that
will.
will actually
You just gotta provide the
know because
customer the margin.
no,
Just
Gabe,
okay. Hey,
guarantee,
you can say guarantee all
guarantee.
you want, but logically, why
Yeah,
wouldn't it?
they
I
won't do
would
it.
do it. So why wouldn't?
I'll tell you why.
Wow.
Uh, no, but you would do it because you need the money. People
Sure.
that drive the car wouldn't want random people in their car commuting.
Why?
Nobody that owns a car for personal use cares about that enough to allow random people in their vehicle because people keep shit in
Mm,
their car and they also use their car and they also don't want strangers in their car because then they have to drive that car when they need to drive it. It's only going to be people that want to partner with Uber, so they'll buy a bunch of cars. They'll buy like a fleet of cars, like 5 Ubers, and they'll
okay.
lease them back, a fleet of Teslas, and
Okay.
they'll lease them back to Tesla to make money, right? It's
Sure. I
gonna be
mean, I
like a
think it can be
business
both. I
model.
really don't think there's a blanket statement. Like, I think there are definitely people
It
that
won't.
will, like, I don't use my car
Remember,
during the week or something.
yeah, but those people are like less than 10% of the
Sure.
people. Like,
Sure.
if I had to
Sure.
guess, it's like
I
less than
got.
10% because
Sure.
again,
I don't know, but
it,
yeah.
it's again, it's like people don't want. Like, dude,
No,
I can tell you
I get
that
that
I
argument. Like
know.
if it's the only car you have and you use it daily, then you're not gonna be. I mean, I still think that if you see the good margin, you might still think, okay, like let me get my shit out in the evenings and let my car drive around. Like if it's in New York City for all these people, and then it's like I take the risk the same way an Uber driver takes the risk of drunks getting in the car. But I don't even have to be in the car. So it's like people that have like do Uber, it's like it's their personal car, but then they go out like at different hours and then they drive that car around with random people. And it's like, yes, now they're not gonna be supervising, but you just add cameras, you add like liability, like agreements with the customers that get in your cars, and then you run the risk because it's like if it's profitable enough for the user, I'm like, I have my car, I get home from work at 5 p.m. and I don't use my car until the morning. Why not have it running around for a few hours? If the margin is enough to cover the gas expense, the risk
People
of
are only,
something.
people are only gonna do that, or people are only gonna do that if they need the money. Nobody will do that willingly if
Sure.
it's their only.
I
That's
mean,
what I'm trying to
everybody
say.
does the things for the
Like
money. I mean,
I know, like so many vehicle drivers. Nobody, like people keep stuff in their car, right?
but they just stop
And then
doing that if you can make money out of not keeping your stuff in the car.
but then it's also like the prospect of like imagine you have one car and you use the car like you said to go to work,
Yeah.
come back from work, right? And
Yes.
then you don't have another car.
Yeah.
You're not gonna take the risk of somebody crashing your car or somebody messing up your car like booking a trip when you don't want it to be booked or anything like that. Nobody only car.
Mm,
It's
I
gonna be
mean,
just people. Yes,
yeah.
bro. Because again, like
I don't know. I think it's
Yeah, I know this. I have a very specific insight on this because I did Turo for like 3 years.
uh-huh.
Nobody, all the people that have this same logic that you're saying, they're like, oh, I only use my car on the weekends, or so I'm thinking about leasing it on Turo
Uh-huh.
because it can at least help me cover the monthly payment and the insurance, right?
Right.
That in theory seems fine if you need the money, by the way, which is not people that really need the money. Even those people always end up unhappy because the cars get messed up, and on top of that, like it's like you still need the car, so it's like it's not ideal for you, right? And like people mess up your car, it gets booked when you don't want it to get booked. You might need it one day that you didn't think you might need.
I don't.
It has a trip or
Okay, look,
something.
the only thing from what I'm hearing that would be like I would agree on is the fact that it's like, okay, the car might get messed up. Again, you just weigh those options. You're like, okay, how much does it get messed up? But then the thing of getting booked is like, if you only have it available for the hours that you have it available, how is it gonna get booked? It drives itself. Like it just drives back home whenever you tell it to drive home.
Yes, but the getting messed up part should not be discounted
No,
because
I'm not
it really
discounting it.
does.
I'm just saying to use that and say that
And you
nobody's
saw,
gonna lease it or like a really small percentage. I don't think it's that
yeah, it should be a really
simple.
small.
But even okay, but
Yeah.
again, I'm just gonna give you all these things which I don't think are that easy to like elucidate. But even with that, and you're saying the only people that are gonna use this are people that buy fleets of Teslas. Great. I mean, what's wrong with that? What my point is the margins. Like once you get to a software that is able to do that, even if none of the individual owners do that, what?
You're still getting your margins eaten alive because you're still paying out people. You still have other expenses. It's not just software expenses.
It really is just software. What are you
Right?
talking about? What is the other
It's
expense?
not just software. You're getting money from the trip, and you're giving a portion of those proceeds
Yeah.
back to the people that are leasing you their cars. And then on top of that, your insurance costs are going up because
No,
you're
the
insuring
insurance
all
is
the.
on the person and the client. You can pass on
Oh
to the
no,
client.
insurance, car insurance,
Uh-huh.
as it is right now,
Yeah.
is only for the driver of the vehicle. It doesn't apply. Like my personal insurance doesn't
Yeah.
apply to the guests that book my car on Turo. Turo has their own personal insurance and is completely
Sure.
liable for any accident that
Sure,
happen.
but like now you're discounting the
But
fact that
no
this is gonna be a self-driving vehicle. So then it's just a matter of the regulations catching up. So yeah, I mean, if you're saying the regulations are not gonna adjust to a
yeah,
self-driving vehicle,
no, but Tesla will have to make its own insurance no matter what. Like even if it's a self-driving car, they're still gonna have to insure
okay,
it. Right? Sure, maybe
okay, that's
because
even
it's
better. They'll,
self-driving, they won't have as many issues. But
uh-huh.
you're still, even though it's not, even though like the risk of outside damage is very little, right? They
Yeah.
still have to insure against interior damage because the guests are not self-moving. They're in there and they can do whatever they want, and there's
Hmm.
no like repercussions for them, right? Like
Yes,
maybe there
there
is, maybe
is.
like
If there's a camera inside the car,
sure, yeah, I get it. But then you still need insurance for that. Like Tesla still needs an insurance policy for all that stuff to pay
okay,
you. If they're unable to get the money from the guest that damaged the vehicle, which happens a lot, at least for Turo, right? Because
right,
it's pretty much the same thing as Turo, right? In terms of
right,
aside
but
from
just
the outside
automated.
damage,
It's an
like
automated
right,
Toro.
it's
Like,
not a automated Turo. Yeah,
okay,
Turo needs an insurance policy because my insurance nobody's
right.
insurance
No, I get
covers
that.
my
I get
car
that.
when I'm not driving.
I get that. There would be like a full self-driving insurance, so it's like some insurance company will have to cover it for them, or Tesla to have their own insurance company themselves. Okay, and now what?
Yeah,
Insurance is it's just another part of the
not,
business.
it's not just soft. Yeah, well, that's what I'm saying. It's not just
No,
software.
but it
It's
is like
it's
I mean
everything.
the part that is relevant is just software because the insurance policies is like just a matter of financial calculation of the risk. It's like whatever you're paying in fees is because it's the calculated risk of having to do a payoff. If they own the insurance company themselves, then they have that float that they can work with. If they don't have the insurance company and they're paying an insurance company, it's the same cost that you would take into your own insurance for the car, and that just cuts into the fees. So it's like whenever you rent out your car in full self-driving mode, you only get 20% or whatever because 15 or 20% of what the customer pays goes into paying the insurance. Like it's just part of the
Yeah,
margin.
same thing with Turo. They get paid, but then insurance premiums don't always cover payouts. Like insurance
Mm,
companies aren't always, in the way that you just described. It's like a lot of times
okay.
payouts cost more than premiums collected, right?
Yeah, that's
And then
just
again,
yeah. Uh-huh.
It's like the payouts eat into the margin of it. It's like when you say software,
But now
I
you're talking.
imagine what you're
Uh-huh.
saying
Uh-huh.
is that they're just leasing out their software to people, but that's not what's happening here. They're
No,
leasing out
that
their
is not what
software.
I'm saying is that the margin of software is the fact that what the product that they're developing, which is just full self-driving software, once it's hey, what's up, Mel? Yeah, we're talking a bit of insurance with Tesla and how they will go about when they have full self-driving and how those like cars will be insured when they're used as robotaxis. But what I'm saying is like once that software is developed, you don't have to do anything else. Like the software is developed, you gotta maintain it and improve it like marginally. But now you have a software that when you deploy it on any Tesla, it drives by itself. So then you just can charge a high margin because the service itself pays off more than the cost of the software development that you've been putting through like in the past years. So the thing is like now you're saying, okay, we gotta also add the cost of the insurance. Sure, you add the cost of the insurance to the price of the ride, and then the customer pays
and
for that.
and your and the cost of either the vehicle itself that they're fully operating
Uh-huh.
or giving out a payment to the people that they're leasing a vehicle
But you say
from.
give out. It's not like they give out a payment. It's that they collect a part of the payment. It's like what you say. Somebody which owns or has money is like, oh, I'm gonna buy 5 Teslas and have a robotaxi fleet that is running 24/7, and then Tesla gets a percentage of the revenue that company makes, and the company's buying the
Yeah, yeah.
Teslas too. So it's like it's a win-win because there's more demand for the Teslas because they're vehicles that you can buy and make them drive by themselves around. And the people that own the vehicles are also that option. So it also incentivizes, oh, what car should I buy? Let me buy a Tesla because whenever we're not using it, we can rent it. You're saying nobody really is going to be interested in that? I don't think that's that clear. But again, even if you take
Not
that out,
nobody, but it's a very not nobody, but it's saying it's a
okay,
very small
okay.
percentage
But
of
even taking
people
that
that
out, it
buy.
goes back to the fact that it's an available option for anybody that can do that fleet thing. And it's not Tesla putting their cars out and then paying out anybody. It's just people buying Teslas and taking advantage of a service that Tesla
Yeah, yeah,
charges a fee
yeah.
for.
Again, that this is all like the fringe. I think the main thing
Okay.
lease out, and they use their own cars for it, especially in the beginning. Like that's
I
what I
don't
think.
I don't think so. I think in the beginning they use that for development reasons until they get it like fully developed to a point in which it's safe and they have those insurance things figured out so that the insurance companies cover self-driving cars and things like that. But I mean, in any case, those policies should probably be lower because there's way less accidents with self-driving cars. So I don't know. I mean, I just don't think it's
Yeah,
at the
maybe.
limit of it. Like when they get there, I'm not saying yeah. Like I don't know when they're gonna get there. I wouldn't buy at this price Tesla, but the ultimate solution, which is definitely possible, like they can do it. I don't know when, but they can definitely get to that point. It's a really good scale because it's just software that you deploy and then you do the same thing as Uber, which is you're not the expense comes on each ride. You know what I'm saying? Like whenever the car goes out into an auto riding, like self-driving thing, then the fees for the insurance and all that is paid by the person that is hiring the robotaxi. And I don't know. Yeah, yeah, it doesn't seem that crazy to me as an idea.
Uh,
And that's why I think the PE is so high because they're looking at Tesla as more than just selling cars, but like they're a
it,
software.
like it, I don't know, it just doesn't work. If you look at, I mean, just rental car margins and then Turo margins kind of just show you that it's a tough thing. It's like
Well, again, I
it's very
mean,
hard.
I think rental is more complicated because there's a transaction between two individuals. You also can like don't have as many like monitoring systems. It's not self-driving, so it's more likely to people are like, I don't know. Like I get it though, but I think it's a little bit different. But yeah, even with that, the margins, it's just I don't know. I don't know actually. I'm going to a point. I don't really know what I'm saying now. But yeah, I don't think it's a bad business to add on top of the selling of the vehicles. Like I don't see how it couldn't be profitable. Even if it's a low margin, it doesn't add an extra cost once the software is developed. Once you have self-driving, it doesn't add an overhead cost to have
Yeah,
robotaxis.
bro, the software is the least of their concern, bro. Like I agree that if they get there on a software perspective, that's perfect. I'm saying it's all the other stuff that's gonna eat everything away. It's gonna be a high margin, but it's gonna be a
No, but
the
it.
software is relevant. I get it. Like I'm not arguing that the software
Mhm.
is going to expensive to manage and to update and anything like that. The software is going to be the thing that gets them to the point where they try to do any of this. I'm saying everything else is going to be the thing that's going to fuck them up.
But everything
Everything else, and
else is just insurance, what you're saying, and they can
same
put
thing
that
with
up to a different insurance company.
not
That
it's not just insurance, bro. It's not just insurance. It's like you share the payout. You have to find people that are willing to give their car. It's like all that stuff counts. Like if you can't build out a proper fleet with other people's vehicles, then it's like all these issues arise when your original plan doesn't work out.
But I just don't get what they like. Once they once they get the software to the point in which it can do the thing, right? If nobody uses the service, what money are they losing? Like
They
that's my
lost all of the cost of building the
no,
software.
because it's okay. Yeah, but now they can wait as long as they want because the software is not going bad. It doesn't depreciate or anything. Now they can just wait, and then the money is gonna come in eventually. Because even if only one person uses it, like you know what I'm saying, like I'm not saying it's like what we want is people to use it. Like what Tesla wants for people to use it. But what I'm saying is like once the software is developed, it doesn't depreciate. So it's just they can wait until people use it.
That's not how. That's like fairy tale thinking, bro. Like what are you talking
What?
about? Wait.
Because
They're a
you're saying,
public
because
company.
my point with that they can wait is that there's no cost to maintain once the software is fully developed.
There's a cost in that they're beholden to shareholders that are going to be asking to work out. It's not like as simple as, oh, it didn't work out, we can just scrap it.
No,
They're
I'm
not
not
like
saying
they're like
no,
a $10 million company. They're
no,
one of
no.
the
I'm
biggest.
not. You're not understanding what I'm saying. I'm not saying it's scrappy or like it can fail and it's fine. What I'm saying is the point that once it's developed, like there's no cost of maintaining the service. The cost only goes in this insurance and all this when the robotaxi is active. And at that point, you're passing that out into the customer. So whenever the robotaxi is running and there's rides happening, then that cost for insurance and all is paid by the customer. You know what I'm saying? Because each one of those rides is just accounted for by the insurance.
Yes. All right, bro. Like I understand. You're not understanding that it's not. It doesn't mean that it's going to make money. You know? None of the stuff that you're saying means that it's going to be profitable enough
Yeah, okay.
to
I see what you mean. Like the return on the invested capital on developing the software, right? You're saying all this money and time that they're spending on developing the software is not going to pay off because people are not going to use the software. Therefore, nobody's going to pay the fees or whatever, right? That it?
Yeah, and then
Okay.
even if they do, like you said, I still think there will be issues in profitability, right? I still think that. It's just
Okay.
in a perfect world, if everything works out and you can get even 50% of the people that own the, then it might work. But even in that scenario, it won't be as high margin as a pure software play.
Well,
A
right. I mean, I
combination
don't know what you
of
mean that pure software, but yes, I get that. That it's not just like yeah, you gotta
it's
worry about the
not
infrastructure. Like Uber,
software.
like Uber is not only software. Is that what you mean? Like it's not only software the same way Uber is not
Yeah,
only software. Yeah. Okay. Fair.
exactly.
Yeah.
Exactly. That's what I'm saying. So, whatever. We can move on from this. But I don't know. I don't even think it's gonna happen. That's the whole thing. Is that I don't even think
Nah, it
it's
will
going.
definitely happen, but why wouldn't it? Like, what is gonna happen? They just give up and then like we couldn't figure out full self driving. That's what you think is gonna happen?
Yes,
No, bro.
they're gonna say we couldn't figure out full self driving, or the government told us that our version of fully quote unquote fully
Nah.
figured out self driving isn't safe enough. That's what I think is gonna happen.
Well, then
And
they'll
then I
make it
think
safe, bro. It's
that
just nah, bro. It's
it's
just
two companies doing two different versions of self driving, right?
yeah,
One version uses LiDAR, one version uses cameras.
yeah.
One between those two, I find it unlikely. I mean, it might be, but I find it or regulating bodies will say that both of these are valid. I think they're going to pick whichever one is better and say that everyone that's doing driving needs to do this, right? And
Mm,
so if Tesla has 10 plus years of data extraction based on a specific type of self-driving capability, and the
mm.
government comes along and says, you can't use this, you have to use the better one, that Tesla figures it out, and then the government says, hey, Waymo, you can't use LiDAR anymore. You have to
Yeah,
switch to Tesla system.
I don't think that's how it
I think it's a
works.
winner takes all.
No,
Yes, it has to be because
no.
the government and regulating bodies are fully they only care about safety when it comes to this thing, right?
Yeah,
So
so
if
that's why
they
it matters is the results. If the full self-driving that they have, even if it's on cameras, doesn't have accidents
they'll
or to
never
a
be equal. They'll never be equal. One will always be better
yeah, but
than
that
the
doesn't
other.
mean
And
you that
one
doesn't mean that the
better.
cutting like condition is what technology they use. The cutting condition will be how safe it is. It's like if it has less than 2% accidents, and then you tell me LiDAR is better at meeting that, sure. Then they'll have, the other people will have an advantage for however long. I'm just saying once they meet that threshold of safety, why would regulators care how they get there? It's just a matter of whether they can do that with cameras, which you can say that I don't believe that with cameras they'll
One
get
is
to that level
safer
of
than the
safety.
other.
Huh?
One is if one is safer than the other, they'll just tell you to default to that.
They can't.
That's what I think.
That's yeah, but it doesn't make
They
logical
can. They
sense.
can
Like
do whatever they want.
they'll say you should use LiDAR because it's safer. But if the other one is able to do as safely, why would they care if they use a cameras or LiDAR? They
And that's the key thing. You're saying as safely. I'm saying it will never be. They will
why
never be equal.
why
They will
couldn't
never
it be
be
as equal? Like why couldn't it be as safe? It's just
because
a
it's statistically improbable.
okay. I don't know what to tell you. I just think
One will
it.
always be better than the other. They're going to continue to improve until they get to a max point or whatever. And I think
Okay.
one will be the clear and obvious better version of that thing. And
Nah,
whoever that is,
nah.
that'll default to the gold standard of that industry.
Nah, because that's like saying, I mean, it's not exactly the same, but it's just like kind of saying that because automatic cars are safer if they were, then everybody's forced to buy automatic cars. Or if you have, I don't know, cars with cruise control.
What you're describing is a maximum threshold. What I'm describing is a minimum threshold. It's
How?
very different. Saying everybody has to get a self-driving car is not the same as
But you're
a
saying everybody
self-driving
that
car can
does
only
self-driving,
operate
you're saying everybody
based
that
on
does self-driving will have to do LiDAR. No?
if it's yeah, it has to meet a minimum safety threshold, right?
Yeah, there you go.
If they default the minimum safety threshold to the mode of operation that's better, then
Yeah.
the other one doesn't meet that requirement in the eyes of the government, and then that's the
On a,
one.
ma- on a safety criteria. All I'm saying is that the criteria will be based on safety measures, not on what technology uses. Just because one technology gets there first, if it does, doesn't mean that if the other one gets to that same threshold of safety, they're not gonna allow it because the other one is safer. It's safer if it is safer, and if both of them are safe enough, they're both allowed. That's all. Like
Yeah,
it.
I don't think so.
Huh?
I don't think so. I don't think that's how
What?
that's how
But
they do.
why would they not allow you to drive a different technology that is as safe? Or at a
It's
minimal
not
level, even if it's not at a maximum
said
level.
that it's not as safe.
And again with
It's not
this,
as safe.
yeah,
That's the threshold.
but it goes back to the same thing. You're saying it's a
That's
minimum
the threshold.
threshold, but you calling it a maximum threshold because you're saying only the one that is the safest will be allowed. I'm saying they will allow any
Yeah.
that are safe enough. The same way they allow like cars with different features that are less or more safe. Even if they're statistically this safe, if you have this feature in your car will have less accidents. They still allow you to buy one with not that feature as long as it's safe enough.
I don't know. I'm pretty sure. If I had to guess, I'm pretty sure to
Okay.
the best. You know,
Well,
and
the
then
good thing
tell
is
you.
that we don't have to guess because we're not buying the company, so we'll see how it plays out. And I think it's fine. I think it will be fine. But yeah, it could. I mean, your thing is not out of the realm of possibilities because regulators are retarded.
That was
So
my initial point is that we're never gonna find out. It's
yeah,
never gonna
well, it goes
happen.
back to I really that makes no sense to me that you really think that they're just gonna give up on it.
No, I don't. I think what'll happen is like self-driving is gonna be. It just get better. It's like everybody that has a Tesla will be able to just have their car drive them. Like I think that's what it is.
Yeah,
You
like
know?
it'll improve your driving, not full self-driving.
No, like full self-driving, but
Okay.
not in an interconnected system and not
Uh,
robotaxi. I think that's
I mean, once you get
just
to
like you
full
own a Tesla,
self-driving,
Tesla drives. You know?
I don't know. I feel like once you get to full self-driving, I don't see why eventually you wouldn't also get to robotaxis. It's my car. I can drive alone, even if it's only for delivering packages. I send my car to deliver a package or some shit. I don't like. It's just why wouldn't I let the car drive itself and do other things for me the moment it can drive itself? Whatever. We're really like deep into this stuff now, but
Yeah, it's not. Even if it does happen, I think it's so far away. But again, if I had to guess, my guess is that something will get in the way.
okay. All right. We'll see. We'll see.
Or we'll have to wait like 10 years to get what you
Yeah, I really
described.
don't know when, but I think because it's possible, and because I think Elon Musk is a very determined individual, and they have talented people working on it, I think they'll eventually get there. I don't know how long it'll take, but like, yeah, I don't see the guy giving up on it. Like it's what you say. He'll say fuck the shareholders. I believe that. He'll say I'll raise debt. I believe that, but I don't think he'll give up on it. So because he
He's not
doesn't.
gonna give up on it. It's not gonna be as clear cut as that. It's gonna be a situation like, imagine they're running out of money, and this is, by the way, I'm describing like current events. They're running out of money. They're becoming less and less profitable. The stock is going down. They're
It's.
having a harder time raising money.
Mhm.
They're way further from the goal than promised by Elon Musk. Elon Musk is getting older. He's running several companies. He leaves, right? He leaves as a CEO.
Uh-huh.
He appoints a new CEO. The new CEO works on the project for another 2, 3 years, realizes that it's way further than it is possible, and then they get to a situation where they have to scrap it because it's costing them too much money every year, and shareholders want profitability now.
Look,
That's like a realistic situation. That's
sure.
not like a
If
clear
they get
cut
to
like,
the point,
oh, that's
I'll concede that. If they get to the point they're able to kick Elon Musk out of the company, sure. That guy, new CEO comes in and then tries. Sure.
not gonna keep him out. He's gonna leave.
Nah. That's what I'm saying. I don't believe. I mean, maybe I'm wrong about my reading on his character that he'll give it up. Like he'll be like, no, I'm done. Like I'm not. Like I'll give up on this Tesla thing. I'll just. It's too big of a problem. I don't want to figure it out. I just want to live my days happily for the rest. It doesn't seem like to me that type of guy. I
No,
think.
happily. It's that you go and like, dude, CEO. Like, why did Jeff Bezos leave Amazon?
Jeff Bezos is a very different
He's not old.
CEO, but sure.
Yeah, but
But
he's not old. He's
yeah,
the founder. It's a founder-led company. It's his company. He left it. Why did he leave it?
because he wants to live a good life. He doesn't want to worry about it anymore. And it's a
That's
different
true.
company. It's not. Uh-huh.
That's not true. He started a different, he owns a different company that he's the
Sure. Okay.
CEO of. He's
Whatever.
not
Okay.
retired.
Yeah, but like he didn't want to do anything else with Amazon. Like he's like, but he's not saying I want to do the self-driving Amazon. But Elon Musk is saying he wants self-driving. He's even adding more things to Tesla. He's saying now we also want to do fucking robots. Like the guy's not. It doesn't give me signals that he wants to just. Oh, we're done with Tesla. We're going to the end of this, and now I'm gonna just only do SpaceX. He doesn't. He doesn't communicate that at all. It's more like the opposite. He's over like promising
But
because he
Jeff
has
Bezos
big
never
dreams.
communicated something like that either.
I mean, when did before he left? When did Jeff Bezos say anything like, "Oh, we're gonna do this crazy thing with Amazon"? No, he was just working on the other ventures already, saying we're gonna do Origin, we're gonna do all this stuff. So it was already like there was nothing new he was announcing that he was gonna do with Amazon. So he reached a mature point, and he's like, "There's nothing exciting for me to do here," so he left. Elon Musk is saying there's a lot of exciting things he wants to do at Tesla.
That's not true. That's not true, bro.
What was he saying
Amazon is
about?
always expanding. Amazon is continuously expanding their core offerings, and even the parts of their core offerings that they're expanding right now
Yeah,
were initiatives proposed by their old CEO, aka Jeff Bezos,
but
that
again,
you have no plans for the company. You just leave because in his head it was the right time to leave.
okay, well, do you?
Really know
What
why.
I'm saying is that when
But
you're
he's not.
saying
He
Elon
didn't
Musk's
retire.
time, right time to leave is now, I don't agree with that. I don't think the right time for him to leave is before he figures out full self-driving mode. I don't like. I don't see how that adds up in his head. Why would he leave before he figures out what he said he's been trying to figure out this whole time? That would be giving up, and I just don't think he would be giving up on that. You know, if he said I'm gonna do full self-driving, and now he's like, no, I don't.
It's not giving up because he's not like selling the company.
Yeah,
He's not.
sure.
He's just not
He's not gonna
the
do it.
operating off.
Yeah, what then? How is that not giving it up?
I
Like
don't know,
somebody.
bro. I mean, there's been rumors. Like, granted, the rumors have been denied by Elon Musk himself, but there have been circulating that they are looking for a new CEO to succeed Musk.
Oh, I mean,
That's
I think that's probably true. I mean, it's like it's at a weak point. I agree. I mean, the board of directors will always do the board of directors thing. Like they're gonna try to like uphold the company. Elon Musk is too volatile. He's too much into politics. But as long as he has the control, like, yeah, they're gonna try to get him out. Yeah, I agree. But they probably are trying to get him
No,
out.
he's
Also,
gonna
this,
leave.
he's not gonna leave,
He's
bro.
gonna leave
You
to
can
work
we
on
can
the
bet on
stuff.
this. I'll actually put money on the line for this. I don't like Like he will resign as a Tesla CEO. I'll bet money on that he won't. Doesn't-
Yeah, I mean, because the whole thing is that like I feel like if you were to ask him which venture he's more passionate about, I would say that SpaceX
Oh, for
is
sure. And it's also better. Like they control all the fucking space infrastructure now.
type of thing, you know? Like
I agree.
yeah. So I don't know. It gets to a point where he might just say to himself, and it's like what I said, the thing of when Tesla is his only public company, right?
Yeah.
And
Okay.
it gets to a point where you face your it's what you said, like it's his goal is a noble one, right? And I get it. And he has not shown any evidence that he doesn't not want to do it. He's fully committed. He wants to do self-driving, he wants to do robotaxis, he wants to do robots or whatever, right?
Mm-hmm.
When you're a public company, you face so much scrutiny, and on top of that, you can't always do what you want to do. You can't continuously burn money for years and years and years because shareholders come down on you, right? It gets to that point. So it might not be a thing of
Depends on
like,
this. That depends on the share
gets to the
structure.
point where he's like, forget about this shit. I'm gonna go work on the thing that I'm truly passionate about. I'm gonna make sure that Tesla is still good. Like I'm gonna make sure it follows my plan and aligns with my vision. I'm just not interested in running the day-to-day operation. And then that's the beginning of it. You hire someone that you think is fully aligned with you and your vision, right? And then over
Mhm.
time, that changes. Like it just with the passing of time, things happen. The new CEO kind of grows into his role, becomes his own, like, kind of develops his own ideas, his own management style. Things happen, ideas get scrapped. It's like anything can happen. And when you're not as profitable as you were, and when your core business is no longer growing at the clip that it was growing, it's like hard to envision something that's like so difficult to do. I don't know. Like I just think in the past it was easy to make huge promises that were far away, but you said they were super close and all this stuff because again they were shitting money. Like the company was growing insanely. They had the best margins in the industry. Teslas were hot. Their supercharger network was doing well. So it was easy to be like, hey, because again, it's like on both fronts. From the front of like you have a ton of money, so you're not really worried, and from the front of investors don't really care that you're not providing anything because the stock is going up, right? So it's like you have no outside pressure. Now they have outside, and so if they don't meet these deliverables, then things are gonna get more and more complicated. You know what I'm saying? Like it's a rough road ahead. It's a rough road ahead,
No,
and
I
he's
get it, and I'm looking
saying
into it now, and it's like he can be taken out. So that's the thing that I can see. If they take him out, like an activist investor and stuff, and they take him out of the, then yeah, I believe that is possible. But he's already saying that he's uncomfortable with the fact that he can be taken out, so he's probably gonna try to buy more shares and stuff. Now, he doesn't. I thought he had a better share structure. Like I thought he was like Zuckerberg or whatever, but he's not. So he could be taken up by an activist investor. He won't give it up. But the possibility that he doesn't calculate it right and then crazy activist investors come in and kate him out, sure. But he won't give it up. Like he's probably gonna buy more shares just to.
not
Uh-huh.
gonna be an activist in this situation. Like they're not gonna oust him.
He's not gonna leave then.
It's
He's
gonna be an
already saying
internal
he's gonna
thing.
buy more,
He'll leave under the pressure of people around him saying that you
bro.
should leave and bring
What?
in someone. Yeah, like,
What? Like just like a
he won't
personal
want.
pressure? Like they're like leave,
Yeah, like,
please. Like
he
what?
he won't. Yeah, like he won't want to, but he will
Why?
because people will convince him that it's the best thing for the company in that current
He
moment.
doesn't care. He's already shown. You said it yourself. He doesn't give a fuck about shareholders. It's his company. He put it public so he could raise funds to do what he wants to do, and he'll try
He
to do
does
that.
care about. He does care about shareholders because he wouldn't care about. He cares about pumping the price so that people buy, so there's more money available.
Yeah, because the
You
the
know,
ultimate thing he cares about is getting it
but
done. That's what I'm saying. Like it's not like
does
he's gonna give up on his vision to make shareholders happy. That's what I'm saying. Like I don't. Why would he do that? That makes no.
I
Huh?
It's those two things are like yeah, those two things are aligned though. I'm saying like him over promising and achieving his goal is aligned with what shareholders want, but the shareholders want and they want the price of the stock to keep going up. That's the
Yeah.
biggest thing.
Okay.
And if those two things start going in different directions over time, that will end up if his shareholder base turns on him,
Uh-huh.
it gets a little tricky. to do what he wants to do. Because again, like if he doesn't, it's all about meeting the.
I don't. And when you say
But even if he
tricky, I
doesn't,
don't know what you mean because it's tricky. It does in the sense that he can be ousted. That's the only thing I see tricky there. I don't see. He doesn't seem like he gives a fuck. Like if somebody tells him, "Oh, this is better," he doesn't care. He's like, he's an overpromiser. He's gonna be like, "No, we'll get it done." Like it's like these people are not believing in me now, but I'm gonna get this figured out. Even if I gotta take the stock all the way down to like almost bankruptcy. Even if they have to go bankrupt, I think he'll be going all the way. Because why? What does he have to lose? The guy obviously cares more about these noble ambitions, as you say, than the actual money of the shareholder and stuff. Because he believes once he achieves them, they return all that money. And again, he does it for the love of innovation. It seems to me. So
no, but he needs the money for all that.
yes,
Like,
yes. So it goes back to it's not under his control. Everything is not under his control. But whatever is under his control, he's not gonna give it up. Why would he?
again, it's like what I said. Like if there's no money to do this stuff, and then there's external pressures and all this stuff, I think clear cut as you're making it, but like by any means that he'll just do it. Like I don't think he's gonna. I think he'll just go. He'll be like, I'm old. I did
Mhm.
what I had to do. You know what I mean? Like I'll just move on to my other ventures are just as interesting and have just as positive an impact on the world, if not.
All right. Well, that to me is called giving up, and I don't think he will. He just like it's too tough a fight against all this shareholder pressure and stuff. So I'm just gonna focus on SpaceX, which is more important. It's a higher priority. I don't think it will get to that. I get that's what you're saying. That it will get to such a high pressure, things will go so sour that he'll be like, okay, this is not worth my time. But I don't. No, I don't. I think the guy will fucking yeah, he'll just kill himself doing this thing. Like it's not
He's
I
not
don't.
young anymore. He has several businesses. He has kids.
He's not that old. How
Okay.
old is he?
No, he's not that old, but he's not young.
Yeah, but he can 54, bro. He can definitely do this for at least 20 more years. Even more probably. I mean, the guy is a nuthead, bro. And also the stock is not that bad. Also, by the way, it's not even depressed much at all. I mean, it's going up on an average basis.
Yeah, on an average basis.
I mean, even on the year, it's gone up.
Well, it's up now with the market.
No,
But
like
it's
today
down.
and like this days has been down actually, but yeah, it's. Oh, you mean like in the year? Yeah, yeah, okay.
On a 5-year basis.
On a 1, on a 5, it's all going up. It's just, I mean, again, it will go down. It will go down because it's at 176p and they're burning money to get this done. I'm not saying it won't go, but not to the point in which he cannot get this done. And if it goes down, he has enough money aside to buy more shares, I think. But I don't know. I mean, we'll see.
It's lower than its 2021 peak.
Okay, yeah, it's not at its peak. Is that what you mean?
It's not at the peak that it reached in 2021.
I mean, it reached a higher peak in 20. It reached a higher peak December of last year.
Last year. Yeah.
So it's sure. I mean, it's at a low point right now, but even from that, it recovered from the drop. It's fine. It's fine, bro. It's at 176p, so people definitely still believe in his shit. It's just they've like lowered now with earnings. They'll be fine, bro. They'll be fine.
Yeah, I don't think they'll be fine. But sure.
Okay. So you think this is the beginning of the demise?
I think if he doesn't reach, it's like what you're saying. If he doesn't reach those things in a certain amount of time, yeah, I think they'll get much more tricky.
Yeah. I mean,
Because it's only recently, like up until like a year or two ago, everything was still fine. Like even if he wasn't delivering, they were still growing. Like their core business was still growing. So none of it really mattered, right? Now their core business is not growing. It's been like at least I think like 4 or 5 consecutive quarters of deceleration, and that's the issue. Now is like when the issue starts.
I guess I don't know, man. And again,
Yeah,
it's just we're speculating at this point. Like we've already, I think, set our parts on this respect. Like It's just
Yeah, we should move on. Can you hear me?
yeah. Sorry, what'd you say?
I was like, we should move on. Let's just move on
Yeah,
to
yeah, for sure.
what we're doing. Okay, bro.
We're looking at TSS, engaged in planning, design, deployment, maintenance, refresh, take back, and end use of enterprise systems. IT equipment. Which is like Cisco. Device peripherals, preloading custom determined application software. Yeah, I don't know about this one. Yeah, these people just bundle IT for companies, like IT tech. But I mean, their numbers are good though, actually. I mean, except for this, which I guess I was pointing out earlier. I don't know how they have a low P price to sales, but really high price to earnings, and they have crazy growth. I guess we gotta look at how they've done.
What do you say they have?
Sorry, what?
Really low PE, really high what?
No. High PE, low price to sales. Prices of 2.8, price to earnings of 73.
Um, huh. Are they
Right?
young? They're a young company.
Uh, 2004. Yeah. Incorporated in 2004 in Texas. And then they changed their name to TSS in 2013. Incorporated means when they IPO'd or no, right? That's when they were founded.
They were founded here.
Yes, so they went. Oh my God. What the hell is this? Wait,
They
what?
changed their.
They were also like a. What is this? They were like a penny stock? I'm confused. Is there a penny stock another at $30? No, that's what's going on here.
Maybe.
I mean, yeah, I'm not. It's not like it couldn't be, I suppose. But yeah, I mean that's what it looks like. Yeah, I mean, when is the? Oh no, yeah, they went live at $5. Live. They went IPO at 2006. So yeah, like 4 years after they were formed. No, 5 years, right? No, wait, 3 years after. Or two, I don't know, whatever. Yeah, I think two. And then they just did terrible for years. They were like a cent. And then they just rocketed recently. They must have changed something. Okay, let me ask ChatGPT, why did it skyrocket since 2024? Why did company TSSI stock price skyrocket after 2024? After a long period of trading under the radar as an OTC microcap, TSA saw its shares skyrocket in the wake of a truly transformative 2024. Several factors combined to fuel this surge. Record financial results, 172% revenue growth, reaching 148 million, swung from break-even to 24 cents EPS, with adjusted EBITDA of 283% year over year. These results exceeded virtually operable. Why? Surge in demand for A rack. Oh, okay. So they build AI racks, like chips and stuff. So this, didn't we look at a company like this? What was it? Was it GigaCloud? The company's core focus integrating high performance computing racks for AI and data. No, it was the Temi, whatever. The one that we're not doing, the semi super microcomputers that did something like that. Could not have been more timely. As hyperscale data center builds out accelerate in 2024, TSSI's higher margin systems integration services and procurement offerings saw explosive growth. Procurement revenues alone up 205%. This alignment with the booming AI infrastructure trend underpinned the steep upward trajectory. In March 2025, management announced a multi-year agreement with its largest customer to support ongoing AI rack deployments. Okay, so this could be rising with the tides. I guess we just gotta see if the valuation is worth it. NASDAQ listing, momentum trading, and discover AI play narrative. Once the exceptional earnings beats became widely known through financial newsletters, forums, and value investing communities, TSSI was repeatedly dubbed as an undiscovered AI play. As each quarter's results continue surprising to the upside, momentum traders piled in, driving the share price higher and higher. And now they're kind of correcting. Yeah, what was that? Like, wait, why are they not showing the earnings dates? Are you looking into it?
Yeah.
Oh, no.
Yeah.
Yeah, we have no statements on Schwab though. Let's see.
Really?
Yeah, no statements. It's weird too, but I don't know. Maybe it's a loading issue. But
Their revenue,
oh yeah,
yeah,
here they are.
they just became. I don't know.
Yeah, it's like yeah. The growth is like in this past year alone. I mean, that's why the stock skyrocketed. Crazy revenue growth. Right, that's why price to sales is depressed. But even at this price, it's very depressed. Operating income, right, expanded. Everything expanded, yeah. Right. Net income from 7
And
cents
why
to
did
6
revenue
bucks.
explode?
Because of they
Did
do
it-
AI for building racks. Like they just set up chips for people, like a whole.
They totally just pivoted.
Oh, here it is. Well, no, they didn't pivot. They just did the same. Well, I guess pivot in the sense like not really. I mean, they were just delivering like creating data centers and stuff for companies and building like IT infrastructure. But because people demanded that way more, and they were well positioned apparently because they have a higher margin systems integration services, so they had probably a good price at the right time. But yeah, I mean, we'll have to look more into it, I suppose.
How do you take a screenshot of your PC?
Alt, I think it's Alt Shift S. No, Win Shift S. Yeah, the Win key, the Shift key, and S at the same time.
Got it.
Okay.
Got it. Got it. My bad.
Okay. What do they do exactly? What's
Yeah, I mean it's interesting enough though. I mean like they're very small, like sub 1 billion. And it's I mean they made some money again.
do they provide
Nothing
the
crazy,
same
but
services they have always?
$39 million accounts
Specialized technology service companies focus on the planning, procurement, configuration, integration. Yeah, they just build your IT for data center infrastructure and compute.
Why do they have so much in accounts payable though?
Yeah, probably because they're acquiring a lot of customers quick. So they're like, you pay us later type of thing. Also, if they gotta build the infrastructure, they probably
That's
start
accounts
working on it
receivable.
and then
Receivable. That's accounts receivable.
oh my bad. You're right. So maybe same
Their
thing kind
accounts
of, but the other way
payable.
around. Yeah, so maybe the same thing, but like the other way around, because they're purchasing all these things. They're building the infrastructure first, and then when they get paid, they pay their suppliers.
Yeah. I don't really like that, but I guess it makes sense. Let me switch to my phone real quick.
Accounts, what is it? Accounts payable? Where is it? Yeah, I mean, it's not crazy. 36 million out of a revenue like that. 148. Oh, what even the cost is what we will have to look, right? 36 in accounts payable with a cost of revenue of 126 is it's what, like 30%? Oh, we're still doing the research, John. It's gonna take a while until we build a portfolio. We're just gathering names through screeners. So once we're done with all the sectors, we'll have a list of stocks that we'll look deeper into. So we haven't selected anything yet. It's just these are names that we selected the companies that we're looking into it more.
Not bad.
Can you hear me?
Yeah, I hear you. I was just telling Johnny what we were up to, because he was asking what is in the portfolio.
Nothing.
Nothing at all. We've been an hour arguing about Tesla also. Not an hour, maybe.
100% cash.
Yeah, 100% cash, yeah. I gotta talk to the broker to set that up.
Yeah, you should put everything into sgov while we sit.
Esco. Well, I first gotta talk to the broker to just open a brokerage account. But yeah. Yeah, we take our time, Johnny. I mean, that's the whole thing. We're trying to do real research. I mean, we're definitely not gonna be able to do super really good research because we don't have the time. But still, yeah. I mean, we're not in a rush. That's for sure. Like, I'll take as long as it needs to until I feel comfortable with the research. I'm not gonna purchase. Plus, the market is up, so it's definitely not a rush to buy. Yeah, it's long term. Yeah, for sure. Like, I wanna build this portfolio like very carefully. And then we'll have companies that will monitor if we think they're expensive but interesting. And then we'll have the companies that we do buy. And we probably, I think, given how the market is, I mean, we'll see when we're ready to buy. But we'll probably have some cash too on the side or put in some type of, low risk like treasuries or something. I mean, I don't know. It's a small portfolio anyway, so I don't know what we'll be able to do. But yeah, it's buy and hold. It is a buy and hold portfolio. Like what we wanna show with this is just that if you just do good research and you buy companies at a good price, and then all you gotta do is hold them and wait for them to pay out. And then if circumstances change, that you gotta change like you got the analysis wrong, basically, then you correct those, but you don't move with the market. You don't try to like, oh, is this, it's time to sell because everybody is buying or anything like that, like momentum and things. There will be like punctual moments. If we see a crazy spike on something, we're like, okay, let's get out of this because of the volatility, and then we'll jump in again at some point. But even that, I feel like I'd rather just hold because you never know. Like, it's just, if you do good research and you buy at a good price, the whole thing is you can just hold unless the thesis changes. And I like that better. I think that's more fun and interesting way to invest than try to figure out what the market wants. Because then you're buying companies. You're not just buying stocks. Well, yeah, okay. So we just added to the list, right? Why waste time? Because it's interesting enough, right? Market shifts every day, exactly. It's a crazy business to try to time the market.
It's easy
It's easy. Yeah, sure.
if you're real.
Yeah. If you're good at gambling, if you got that gambling hand,
Exactly.
you just gotta be good at it.
You gotta understand ball knowledge.
Just be a prophet. Yeah, that works too. Knowing the future always helps. Yeah, okay, this is just, we gotta see if it's sustainable. When do we report earnings again?
Soon. And we're getting into earnings season. I mean, we're in it right now. But these smaller companies typically report a little bit later.
Ah, right, they got more time. Well, yeah, August 13th, according to this. It's estimated, so they haven't confirmed it.
Okay.
You remember Zax, bro? They just quoted it here.
Yeah, I use it all the time.
Oh, yeah?
Yeah, I used it earlier today when you said for the other one that they reported May 1st.
Well, let's see. Oh, those with the days.
It's just a good way to check when they reported, what they reported, and then what the stock did on that day.
Right. Well, they have no info on these guys, though. No estimates. Well, it's small company, like you
Oh
said.
yeah, they're not gonna have
Right.
yeah for the smaller ones.
Yeah, probably nobody's. I mean, somebody's got to be covering them, but maybe not on the sell side, just only on the buy side.
But you can check the move on the last earnings.
Oh yeah,
See what happened.
When was it? Let's see. TSSI last earnings day. Yeah, probably. I mean, we actually don't know. May 15th. Okay, and now TSSI stock.
I think it's just TSS, no?
Well, the ticker is TSSI, but the company is TSS Inc. May 15th. Yeah, it went up. It shooted up on May 15th, and then it's been on a tear. I mean, I guess that was the quarter that made the difference. I mean, they kind of gave some signals, it seems, before because they were penny stock. And then it was like March 2024 that they went over the $1 threshold. But then it was Well, and then they depressed after January from $15. But then in May, yeah, the crazy run up that is now on started that last earnings. So damn, it's only been a quarter away. That is what, like
Yeah.
tripled in value? Yeah,
May 14th, yeah.
that's wow.
200% since May 14th, yeah.
Yeah. Well, next earnings, we'll see. Definitely interesting. TSSI.
It seems to compete against Supermicro, which is struggling, could be a share gain incumbent displacement story potentially. The most recent earnings call also had some interesting unconfirmed rumblings about XAI being a potential customer. Management didn't deny or confirm that. Quote from the transcript is as follows. As you know, we can't comment on the customers and some things that you brought up, but we're very proud of what we're doing on the growth trajectory. One of the reasons why we're moving is to accommodate growth. And we expect there's going to be some spikes. We anticipate the spikes. We prepared for those spikes, and we also prepared for what we think is a more robust line of business. Like we stated just a few minutes ago, that we started to see in the middle of the year with a large project. We're excited about that. We think it's going to continue. We prepared for that. And all I'm saying is bring it on. We'll take as much as you can give us, and we'll go from there.
Whack ass statement. The guy's definitely not ready for the public markets.
Yeah.
But
Biggest
yeah,
risk
but
in
it's
my
good though.
opinion
It
is
sounds good.
97%. So they have a 97% revenue concentration from Dell.
97?
Yes, their only customer is Dell.
Okay, then I mean, yeah.
Valuation standpoint, from a valuation standpoint, 15 times EBITDA. This is, by the way, before this massive run up.
Right.
Seems low for a business growing top line at triple digits. Nice balance sheet too. Throwing off cash versus burning and essentially no debt.
Right. They just got some debt, like 8 million though, but yeah.
He's using annualized EBITDA, given the management commentary in the transcript. That Q1 25 and Q2 are going to look similar to Q2 24 and 23. Well, Q2 24 and Q3 24.
Hmm.
I'm curious about how they were on the brink of bankruptcy a year ago and have now completely transformed the situation. I recognize the potential here, but I'm certain about the scale at which they can function. A year ago, this company was valued at under 10 million. It is difficult to accept that they are poised to generate hundreds of millions in revenue with their capacity and resources. I would appreciate a thoughtful discussion.
What they just did, 2024, 148 million. Well, he said million, hundreds of millions, but yeah.
Well, he's saying that. Well, yeah.
Yeah, I mean, the fact that the customer concentration is like they just basically they expanded their contract significantly with Dell, and now we just gotta see if they're able to capture other customers. But I don't see why now. Again, it goes back with the rising with the tide.
A potentially concerning aspect in their earnings.
Uh-huh.
It is evident they have significantly increased their revenue, but most of this new income is tied to their procurement services, which tend to have low margins and may not be very sustainable.
Yeah. Yeah. I mean, it definitely it's worth looking into, but I wouldn't just buy. I mean, obviously, I wouldn't buy right away any of them, but yeah, it just seems like they just got kind of lucky with the trend. But again, because it's a trend that it's rising everywhere, like it's a tide, if they capture it, they should be fine. Johnny asks, can you reliably beat S&P over the long term? Well, that's what we're trying to do, yeah.
You can't, no.
I can't? Well, I mean, what the hell are we doing then?
We might be able to.
Right, that's what I'm saying. Oh, no, he wasn't asking about himself or in general. I think he meant us, I think.
Oh, yeah, then the answer is we don't know.
Yeah, we don't know, but that's what we're trying to do, yeah. Because if not, what's the point? But yeah, we're trying to just be very concentrated on companies that we really believe and buy them at a good price. And that should work if we did it right. But even then, yeah, it doesn't. It's very hard. But it's just for fun also. Like we just like doing it. That's why it's a small portfolio too. Like I don't want to risk a lot of money on this. So yeah. And again, if it's a buy and hold, even if you don't beat the market, As long as you're not losing money, you're winning. But yeah.
Buy some options.
Yeah, buy some options. That's definitely the way to not lose money. Just buy options, moon it, just buy crypto on the side to diversify.
Everybody is saying that they're going to partner with XAI.
XAI? What is XAI? Grok?
Yeah.
Oh, well, that's really good for them.
Yeah, it seems like it's just rumblings though. And this is
Right.
4 months. Oh, let me look this up real quick. Can you actually well let me just
Dell announced a deal with Musk. Oh, so it's Dell that announced the deal. So is these people just working for Dell, basically? These are the
yeah.
Yeah, maybe these people are like this the super micro whatever, the super micro computer of Dell, the same way Nvidia has super micro, because they do the same thing. They build AI racks. I mean, this actually adds up now that I'm saying it out loud. It's probably exactly that. They are able to deploy Dell's chips into customers. So Dell gives them their business because these people are able to get their chips on the companies. Yeah. So I guess it's a bet on Dell through them. But I mean, if it's at a better price through them, why not? But what do we think of Dell?
Alright, let's just add it.
Yeah,
And move on.
Yeah. I mean, they actually even moved the same as Dell, the stock price, it seems. Well, sort of. Not really. Not really.
Well, sort of really.
Huh?
Well, sort of not really.
Yeah, because I thought the pattern was kind of the same because it goes down and then up and down. But I mean, I feel like I'm stretching it here. Not really.
Sort of, well, sort of not really.
Yeah, not really.
Well, sort of.
Sort of, but not really. All right, are we doing different criteria here or are we good? Because it's
yeah,
funny that at the end we added a lot of financial ones, which is the sector we're not really that interested in. But because we added a bunch from that kid, right?
Yeah, we don't know anything about them.
Yeah, okay. Well, I mean, this is
the more like the ones that we know less about would theoretically have more. It's like we don't know how to filter it properly.
Yeah, good point. But then I feel like, is this screener good enough? But it's like, where would we change? Less revenue growth and more EPS? Like, see value in tech? Let's see that. Let's see.
Why would we?
Why not? I mean, maybe there's some old IT company, some shit that's worth it. Let's see. No revenue growth criteria.
Buying an older
price to earnings of 10 to 20.
Revenue growth. Buying an older company with less revenue growth and stable income is great. Doing that in the sector that's literally a growth sector is like kind of it's pointless.
I don't see why it would be pointless to check things.
Because they're disruptible. The whole thing is that like this sector lives and dies on disruption.
Okay, I'm just gonna give it. I'm gonna give it a quick look.
Steady, mature company in like the pork processing sector. It's a company that's disruptible, and so if it looks like they might not be growing and that they're just staying simple, like solid, it's actually a bad thing.
Okay, I'm not saying I'm looking for no growth. I'm just saying I'm gonna set the criteria without setting a threshold for growth, and then I'm gonna see if they're growing.
So we are looking for growth.
Yeah, sort of. I mean, we'll see. Just I'm not setting it as a cutting.
We want the most growth is the best.
Yeah. But I just don't want to cut it at 15. But within the options, I don't. Yeah.
Everything that's higher is better. We want to be more like. I'm saying is we want to be more.
But if we can find something that is really cheap, that it's just growing at 2%, it might be interesting. I don't see what's wrong with looking at it. I'm just gonna do a quick check. I mean, it's gonna
But again, it's not in this sector. It's more like you don't want something like that because again, it's like what I said. Like it's like it's most likely getting disrupted in that case.
Well, we'll see. We'll see. All right, now. Sequence Westel. Right, like what is this, for example? I'm not saying it's gonna work, but return on invested capital 220%, net profit margin of 156%, price to earnings of 1. I mean, there's definitely something here that's weird, but price to sales of 2, and then they have an EPS growth of 200%, and their revenue growth is 40% the last year. They depressed in the last 3, though. Semiconductors. Fabless designing, developing and supplying cellular semiconductor solutions for massive and broadband internet and things market. Baseband solution, decoding data based on 4G and 5G protocols. The stock just fucking skyrocketed recently, and then it just tanked after. Okay, this is not, yeah, okay, not this one. Let's see another one. Hey, how about, 1 second, price to earnings. What do we have it? Less than, okay, yeah, I mean, I guess between, can I change that here? Yeah, so between 1 and 20. Yeah, like this too. Net profit margin is 6, P of 9, price to sales 0.5, earnings growth 370, and revenue growth steadily growing above 10% in the last 3 years. Zeragon Networks. Wireless transport solutions for cellular operators and other wireless services. Microwave and millimeter wave radio technology to transfer telecommunication traffic between base stations. Site service solution. So yeah, so a communication, like internet network thing. Yeah, revenue steadily growing with expanding margins. They became profitable in the past 2 years and growing that profit. Yeah, so this doesn't look interesting to you at all.
Hold on. Go up. Go to the income statement. Go down. And now go back to the main page.
$200 million market cap.
Go up. Yeah, seems alright. It's not. Where are they based? They're not American.
Israel. Serves internet services providers, municipalities, government, utilities, and maritime communication broadcasters and defense. Oil and
Go back
gas
to the income
companies.
statement.
Huh? In Castilla.
Same it. And I'll go quarterly.
Yeah, it's
Nah,
not
this
crazy
one's
growth.
not great. It is cheap. It's like cheap, but it's not great.
No, I mean I know it's not great, but yeah, it's like that's what I'm
No.
saying. It's cheap, so maybe it's worth it. Besides, like these things take time to figure out. What other ones do we
There's
have?
something
Few.
better. Like we have better stuff.
Again, but
It's like,
it's
bro,
like
as soon as you find something that's like glaringly better in that same sector, it's like, why does it even
because
matter?
what is glaringly better in like microwave communications, in like oil and gas and government? Like
Well,
it's like
that's like
boring tech. Like it's like it doesn't have to
substitute.
be flashy tech. That's kind of my theory. And again, I'm not saying but just like I'm just looking at them and
I'm
some of
not
them.
saying nobody's saying that. What I'm saying
Okay,
is
okay.
that it's an Israeli company that's sure it's cheap,
Uh-huh.
but it's not necessarily cheap for an international company, and on top of that, it's not really growing. Like growing is like the revenue growth is kind of not for sure, not for sure. You know, like I don't
Okay,
know how to
okay,
explain it.
okay. So we'll put that aside. I just want to check a few.
Their Q1 to Q1 is down. You know,
Well, not really, but sure. It's up 1 million, but yeah.
okay.
Space and terms card guides and ejectors, component holders and fuses, circuit board connectors and cable components, as well as variable fasteners and hardware products. They also have customized services solution for various production needs. So these are like interesting too because there are parts, like they sell parts to like makers of electronics. EACO. Now look, did you see the numbers here for EACO? 16%. Wait, where are we? Yeah, revenue growth. Oh wait, 1 second here. Yeah. 5 years is 10, 3 years is 14, last year 16. And then earnings growth 9, 21, and 100. P of 10, price to sales of 0.75, with a return invested capital of 20, and a net profit margin of 4, which is low, but they do hardware. But let's see. Stock price doing well. I mean, skyrocketed recently too. I just feel like if we look at these companies, we have also a more of an edge because people are not looking at this shit as much.
Yeah, I agree, but there's like that's not a like there's better stuff.
Again, we don't know if we don't look at it.
Yeah, we're looking at it.
Okay. Yeah. Income has been depressing. Cost of revenue goes up. Well, wait, what is their gross margin? I don't know why they don't give it to me. So they're trying to capture more market there, I guess. Adjusted net income. Oh, well, that's nothing. Doesn't matter. Okay. They have positive cash flow. Capital expenditures at 33. They're doing something there.
Well, no, it makes sense if there are
Right.
hardware.
No, in a good way is what I mean. Like they're spending their cash in them. But then, all right, so it is investing that's taking them down. And their free cash flow. They're up year over year on the quarter. Same with the margins. I mean, maybe that's why the stock went up like that because they've expanded their margins significantly.
Yeah, probably. If they're profitable.
They also built some cash. I mean, I would like to look into this one.
Okay.
It's just because they do like boring stuff, and it seems like why would they not be able to hold this type of market? Fuses, circuit board connectors, cables. Yeah. What is their cap? 300 million? Yep. All right. IACO.
Huh?
No, I'm just adding the ticker. Let's see what else we got. First Solar showed up here too. You know First Solar, right? What did they do?
Yeah, we looked at it. We looked at it when it was they're like a solar company. We looked at it when we did the other company.
Right. So should we add it then? They have good metrics. 15p.
I like for solar.
Okay, so let's add it. I'll look more into it. Oh wait, what the hell is the ticker? FSLR. DocuSign? Ooh. Yeah, but they've definitely slowed down, huh? In revenue growth. But this could be one of
Yeah.
those that is like maybe it was overbought and then now it's like more reasonable. Because the stock definitely tanked because they're not growing the same. But DocuSign is like, I feel like people continue to use it though. Look at that. Yeah. Like it was super hyped, but now. Didn't Warren Buffett even hold some of it?
Was it DocuSign? It might have been in.
Yeah, like, sure, they're slowing down the growth, but it's still. This is, I mean, it's like getting to a maturity point at 15 PE. If they can hold that market, which I don't see expanding margins. Damn, what the fuck? Oh, provision for income taxes again. Jeez, what is this? Issuance of stock. No, retirement of stock. So they're buying back stock. Wait, no, retire. Yeah, repurchase. Yeah, retirement. Common stock. Nice. I mean, that's good for dilution. But it's like, it's a big expense there. Is it because maybe stock back compensation and they got to keep that under control? It would make sense with a company like that hyped so much.
Yeah, I mean they're just a mature company, so
Yeah. Treasury shares common stock. Well, I know. Shares outstanding. Right. To maintain that, they probably had to buy a lot of shares. How do we check that against stock back compensation? Maybe on ROIC?
the cash flow statement. Oh yeah.
Because here, I don't think they break it down, right? Yeah, okay, let's check it on ROIC. Yeah, that's wild. 600 million on stock back compensation. So then they gotta spend a lot of their cash to take that under control. Yeah, here it is. To avoid dilution. Yeah, I don't see how that's gonna go away though. Because if they're still giving it out. Yeah, no. I don't know what to do with this one. I'm like interested, but then also I feel like this could be the concern. But I do kind of want to look more into how they're doing in their market.
I mean it's got to be close to a monopoly now.
That's what I was thinking, but I'm not too sure. That's why I'm like, but if it is, that's why it's like could be good at scale if they just get over the hiccup of stock back compensation.
Oh, there's also was it VeriSign? Yeah.
Very sign, yeah. And then also I feel like it's something that can be bundled with another service that an enterprise software offers them. Also things like Clear, we were saying like even like the de-evolution of signing contracts being like you know this being phased out, disrupted or whatever already.
Mhm.
Hmm. Price to sales is 5, price to earnings is 15. Wait, but then I think that price to earnings is not correct. Right. Because of this jump. Yeah. Yeah, this is just, yeah, we're not looking at this. This is not cheap actually. Because of this provision for income taxes. Okay. What else we got? I think that's about it. Qualcomm, is that it? QCOM? Qualcomm, yeah, isn't that the people that do the chips for Apple and stuff? Or was it for the competitors with Apple?
Yeah,
16.
Qualcomm's a good company.
Okay, let's open it up. It is at 15p right now. 16. Forward 13. Price to earnings growth of 1.7.
Wait, is it Qualcomm or Broadcom?
I mean, I know Qualcomm is the chips. I don't know. Broadcom is a communication, I think. Yeah, these people, there were the whole craze with 5G and stuff. Integration system forward with advanced connectivity and high performance, low power computing technologies. Oh, we have a Morningstar on this, guys?
Yeah, these companies are big.
Yeah, Morningstar thinks it's undervalued. Handset revenue rose 12%. Okay, whatever. What is there? Bulls say Qualcomm collects royalty income on the majority of 4G and 5G handsets sold. Oh, like phones. As it holds many essential patents used in these networks. Qualcomm is a clear market leader in wireless chips with a leading market share position in 5G. Yeah, this could be good. Yeah, chips in a relationship. Wait. 5G chipsets and relationship with every prominent smartphone maker. It has leveraged this expertise into the automotive and Internet of Things end markets. Qualcomm appears poised to gain share in PC CPUs as, after many years of fits and starts, the Windows ecosystem might finally be tilting its support towards CPUs from companies like Qualcomm. Oh, instead of Intel? Wait, I'm confused. Windows doesn't do the CPUs, do they? Tilting its support. Oh, like the way they structure their like the software or something. Bears say Qualcomm's chip business faces a host of challenges, from potential share loss at Samsung and Apple to some of its customers developing mobile processor IP and design expertise in-house. Qualcomm's licensing business has faced regulatory scrutiny in US, Taiwan, China, South Korea, and other regions. The biggest threat facing Qualcomm is a negative ruling that states its royalties should not be based on the full price of the phone. Qualcomm needs to diversify beyond smartphones, which may be challenging as a host of competitors are competing a similar strategy. I want to look into it. What do you think?
Yeah, it's cheap.
Yeah, right? Cheap, and it's a good company. They're leader in the market, even if they may have an issue holding that. Let's see the statements real quick. Yeah, I mean, there was a bit of, here. But year over year, they're up. But yeah, the comp went down last year, so, well, up from 2023.
What, their revenue growth you talking about?
Well, yeah, I'm just saying the revenue kind of grew a lot here in 2021, 2022, and then it depressed like by what, $10 billion? And then they've been on the way up again, which probably is reflected in the stock price. Let's see their cash flow and cash on hand. Operating cash flow has been steadily up though. They haven't had a dent on that, even though the revenue has to. Ooh, Cash investing. Oh, what the hell is these things? Purchase of investments. Oh, they're buying a lot of things, huh? 5 billion, 1 billion, 6 billion. And financing. Jeez. The purchase of stock. Retirement of stock. Yeah, it's interesting what they're doing with their cash flow, to be honest. I don't know. What is their cash balance? Yeah, I mean, they're definitely chilling. Sales are healthy. Inventory of raw materials is up by a lot. So probably fine on demand. But not a, yeah, I mean, double. Yeah. Machinery and equipment. Yeah, I'll add it.
Alright.
All right.
See legs. Yeah, I think we should be done, bro. I have like a headache.
Yeah, I think we're done. Oh, you mean with the show?
Yeah.
Okay, fair. Let's see. I mean, we're done with
Been
this
like,
table almost.
been like exactly 3 hours, no?
Yeah, well, the video is gonna be shorter because of some technical issues, but yeah.
Yes. Yes.
Yes. Oh wait, look at this one. Oh, this is IDCC. Okay, we already have this one, right? InterDigital. Yeah.
Do we?
Yeah, yeah.
Yeah. Perfect.
And then, I mean, this could be interesting too, I guess. Really slow. No, actually, no. I mean, what is this? Cyrus Logic. But then I was looking at this one, MPTI. 16p to 53 price to sales, 15 price net profit margin, 28% return invested capital. Okay, yeah, this is the last one we'll look at. Because the ACIY, oh wait, ACIW too. Alright, those two and we're done. Mtron Industries design, manufactures, and markets frequency and spectrum control products to control the frequency and timing of signals in electronic circuits. Company offers radio frequency, microwave, and millimeter wave filters, cavity, blah, 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 high performance, high frequency, oven control crystal oscillators. So, okay, but what part of this is part of what? Since 1965 from Florida. These people have been around. Base long. Okay, so they do something that's definitely needed because they've been around. The stock price has depressed recently, which could be good or it could be bad. Earnings, oh, that's why, I suppose. Oh, well, no, this is just beats and whatever. Yeah, let's check here. I mean, they're growing. They're growing at a good pace. So are their expenses. Oh, but no, but yeah, they have really thin margins, though, it seems, right? Well, what was
No.
it? No, that's not. Okay. I mean, oh, yeah, 10 out of 50 is what? 20%. Oh, never mind. Okay. Okay, my bad.
How big is this company? This is a small ass company. Their
Yeah,
cash flow?
yeah, probably. Oh, yeah, they want to check the cash flow first.
Less. I go to the
Oh, like less than their income. Is the
yeah,
accounts
we're like
receivable? No, that. Yeah,
like
that would be the one.
half
I
of
mean, they're
the
so
income.
small amounts that may it's just, but yeah, fair. I mean, okay, what do you want to
$6
see?
million. I gotta touch. What's their market cap?
Yeah, let's see.
It's gotta be like 100 million.
Yeah, 130 million.
Is that like, so like 15 times?
Yeah, there are 15, 16 times earnings, if that's what you mean, or
Good,
not.
good.
Or cash flow, I guess, too, right?
The website, bro.
Well, they're from the 60s, my guy. Products. Crystals, oscillators. The hell? Okay, well, we don't want to get that deep.
Go to their income statement again.
Yep.
Uh, huh. They're growing.
Yeah, that's what I was saying.
Not a lot though.
Not a lot, for sure. They accelerate and then they can slow down. That's probably why they stuck.
What's 8 divided by 41? Like 20 something percent? 21%?
8 divided by 41. Fuck, I'll just
Yeah,
do
like
it.
21,
Yeah, okay.
20, 20.
20. Yeah, 20. 19.5.
What's 9 divided by 32?
30. 28.
Go up again. What's 5 divided by 27?
18.5.
Okay. What's 5 divided by 9? Greater than
55.
50?
55.5.
Huh. All right.
Yeah, good enough.
Wait, go down. Oh, go down. No, 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 no. No, 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 no. We'll do that later. Oh, wait, yeah, okay. I was looking at their operating income. Their net income's even lower. So they're
It,
not even at 50. Are they at 15? They're like at more than 15.
oh, their earnings per share, like the price to earnings? 18, yeah.
Yeah,
No, this is ACIY, my bad. 16.
16. All right, go to the quarterly now. See 2025, what it's looking like.
Up, but I mean, yeah, small
Growing.
amounts, but yeah.
Still growing.
Yeah.
Okay, all right. Wait, oh, it's only one quarter so far. Um, hmm. Yeah, it's not terrible. I mean, the issue is that like it's like what I said before. There's better stuff in my opinion, but like sure, what do
Yeah, I
they
don't know.
do?
I mean, I guess, yeah, that's why I also feel like I don't know because I don't know. Like, I would have to do a bunch of research on what the hell this company. But it's like, I mean, I guess what gives me some confidence the fact that they've been around since the 60s, so they seem to be doing something that's needed. But and if they're growing now and they've been around since the 60s, it's not like they're being displaced by any technology. But I will have to figure out what the hell it is they do because I don't know what oscillators, crystal oscillators, voltage control are. But it seems some other part of electronics that is needed. I mean, I'll look more into it. I don't know how much, but
No, this is not bad at all.
okay.
I like this. This is a nice little sweet spot.
Okay, the other one then, and then we're done for today, is ACIW. Develops, markets, installs, and supports software products for services for facilitating electronic payments in the United States and internationally. It operates through banks, merchants, and billers segments. Offers ACI acquiring a solution to process credit, debit, and prepaid card transactions. Fraud detection. Okay, so they're a payment network, but not. Why haven't we heard of them? Like, is it like the infrastructure behind the payment networks? Account to account payments. Huh?
How big is this? Go down. No, they're
Wait
not
1 second.
small.
What's their market cap? My bad. What 4.8?
Four.
This is what you want to know?
Yeah, income statement.
Slow growth.
Slow growth, high PE. I think that's enough for me to say no. I like that their operating income expanded a lot in this 1 year. Is that because of anything unusual?
Uh,
Well, what have they done? They've decreased their selling, general, and administrative expense.
oh yeah.
Yeah, okay. I like it, but I think that's just kind of a sign of there's gonna be no growth.
Yeah, but I mean,
Or
if it's mature, I
cuts.
just like the play or the possible play of, underlying tech companies that are boring. That like because it seems like that if you need these things for reading electronics, and then all these other companies that are doing cool stuff continue to build electronics, It's just like they're just gonna be
Yeah.
underlying there, just holding their shit.
I like those types of companies a lot more when they have a moat, and I don't know if
Nah,
this
well, yeah,
company.
we'll have to look into it, but yeah,
It's a great the idea of what you're saying is fantastic,
yeah,
but
just finding the right
initially,
ones.
if they're competing in a market, then it's like, ah,
No,
what's
fair, fair. But yeah, that's why I'm like, if they're a good valuation, it motivates me to look into it. And then if they don't have the mode, then we scrap it. But at least to look
yeah.
into it.
This is not even a great valuation, really.
Oh yeah, I mean 18. No, what is it? 16. Yeah, these people are
25.
16. Oh no, 18. Yeah. Okay, so then maybe not. Then I mean, these people again,
So,
payment network. This is not the same as the other one with the chips and stuff. But I guess we'll
yeah.
have to see
No,
who is their customers.
I wouldn't add it.
Okay, let me just do a quick check. But yeah, I don't think so either. What are the main customers of company? PayPal, Duola, and Visa. Financial institutions. 5,000. I mean, they're definitely not concentrated. 18 of the top 20 banks worldwide. 9 of the top 10 by asset size. Pretty good. Why did they give me these examples though? First Hawaiian Bank. If they have 18 of the top 20 banks and you give me First Hawaiian Bank as an example. 80,000 merchant customer worldwide. I mean, it seems pretty like they're holding something, but yeah, it's like what you're saying. What is the mode, right?
What percentage of the payment processing markets do they own?
What percentage of
Because
the?
this seems sus, bro. There's no way. They're saying that the 18 of the top 20 institutions. It's like, bro,
I mean, if it's like an internal like payment, I
it,
don't know.
that no, that no, that literally could just mean that they accept like American Express credit cards on their system. Like it's
Mm.
such a nothing burger.
By most industry analysts measure EC worldwide holds a relatively small slice of overall payment processing solutions market, 1 to 2%. Okay, and then yeah, okay, there's just a small payment. But yeah, okay, this is not interesting, yeah, to me. We scrap it.
It's like what, yeah. And by the way, it definitely is that like they say that they partner
Yeah,
with
yeah, yeah, yeah. I see what you mean. Yeah,
money. It's for
that's why
sure
the
that like
examples are this.
that it's just like, oh, like my Visa
Yeah,
debit
it says
card works on
serves, right? Yeah, like yeah, like you can send money to Chase through them. It's not that
yeah,
people
which
used
means
to.
I don't know.
Okay, okay,
Who are
yeah.
the biggest? Who
No,
who
what?
it's yeah, who owns it's Visa and MasterCard, right? Yeah,
Yeah, I
what are
think
the
so.
like
Like 50, 70% of the market, some shit like that. What are the big? Well, how would I say that? What are the dominant players in this
in the payment
market?
processing market?
Yeah, I mean, I
Yeah,
think yeah, right.
hopefully.
Hopefully it knows what I'm talking about. PayPal. Wait, so this is specific but different. Wait, Square,
Oh,
Visa, and Mastercard. Okay, give me the percentages. Big four being PayPal, Pfizer, FIS, and Global Payments. I didn't even know what the hell. So it's not a Visa and Mastercard, though not processors themselves. Oh, because these people don't do the processing. They never underpin the vast majority of card-based transactions. They directly compete with banks, ACH, and real-time schemes.
yeah, I
So
think
I guess
Square is up.
yeah, okay. Square probably for SMBs and simple hardware. So I didn't know that. So then Visa and Mastercard are not really doing the. So they're just at the end point, I suppose. They don't hold the
Yeah,
infrastructure.
they're not payment processing.
Damn, but I didn't know
PayPal,
PayPal was that big though.
yeah, well, PayPal is huge. And by the way, it's really undervalued. It's
Oh,
on my
we
list.
oh,
It's on my list.
do we have in finance here
It's
too?
on my list. Actually, it's not even considered finance. It's considered tech. Funny
Well,
enough,
is it on
but
your list? I don't see it here. Oh, my bad, bro. It's like the first one. All right, so should I add it in tech then?
No, you just leave it on my list. Or I mean, yeah, whatever.
Yeah, I mean, we'll just do the
It's not.
duplicates.
Is it information tech? It's not. It's
I mean, either it's information tech or it's financials. What else is it gonna be? Communications? No.
well, whatever.
I mean, we can check what Schwab says. But yeah, let's see the percentages here. Oh, now it says Visa. Okay, what the hell? Essential global payment processing. Yeah, Visa is 31. PayPal. Okay, so I don't know what it was tripping about earlier. 30 to PayPal. Mastercard is 24. Square is 21. Is the valuation of Square still bloated or no? Stripe.
Yeah. It's on my list though. So
Okay, but Stripe is not public, right?
no, it's not.
What's up, Jones in 9? Almost not yet. No, okay. Well, let's see what this PayPal is since we're here.
Square is on my list because
Square. Didn't that guy announce the new thing? Yeah.
That guy announced it.
What's his
Yeah.
name? Like a
That
Bluetooth
guy.
communications thing. What's his name?
The guy in the new thing.
Yeah, the guy with the goatee, bro. What's his name? The yogi.
Yep.
You know who I'm talking about. The fucking CEO, bro. What's his name?
He is got that block on me like I'm Jack Dorsey.
Yes, yeah, that guy. Yeah. Wait, what's the financial services? So yeah, let's put in finance then. I mean, again, it's on your list. I don't know what the hell I'm doing, but whatever.
True.
True. Just feel like I'm doing some work that way.
Look at it though. It's cheap.
Fucking fuck.
It's cheap and it's very nice.
Okay,
You-
well, I mean, we're done with the screen anyway. Well, like Square?
cheap and very nice. No, it's not PayPal. PayPal. It's very expensive.
Oh, okay.
Papili though. Papili good.
Papil.
Papili good. Papili very nice.
What is this snap ticket here, by the way?
It's for trading, brother.
Oh.
To buy and sell stonks.
Ooh,
Yep. Market.
17 Z's.
Yeah, that doesn't show the full picture though. Double picture though. Double picture though.
Oh, what the hell are they spending their cash on? Oh, they're just buying shit
Yeah.
all the fucking time, huh?
Cash from operations. Cash from operations.
Yeah, they're making a lot of cash and then they're spending $26 billion.
And guess what? And guess what?
Fucking new
They're
companies.
They're purchasing a frick ton of shares. A frick ton.
Oh, yeah? Where is that?
Yep.
Oh, here. Yeah. Holy. Holy. Yeah, so this is
$6
good.
billion per year.
I like, and they're expanding, like they're buying more and more and more. Is the stock price depressed or something?
$6 billion per year of stock repurchases.
Look at this.
Six
Yeah, look at this.
billion.
It's like instead
They're
of
doing
dilution, it's influsion.
crazy stuff, bro. 6 billion. 6 billion, by the way, 6 billion
Yeah.
is 10% of their entire market capitalization in 1 year of stock repurchases. 6.
Yeah.
And they want to do 10 this year. 10.
Oh boy, we should be buying then.
10.
Yeah.
15% of their market capitalization. For us.
For them.
And they're growing
Look at-
revenue at 20+%. And they're profitable. And they're printing cash.
So why the hell people
And
not buying it? Look at this, look at all of
They
them.
haven't even capitalized on Venmo, which is their fastest growing segment.
I feel like you should write a fucking Twitter thread about it, bro.
Somebody wrote a good Twitter thread on this. Wait a second. Now that I'm thinking about it, go go to Reddit.
I
Go to
was
Reddit.
there.
That guy, I think he did something on this. I'm like, I can't. If I remember correctly.
Improve margins over time, low running experience online business. But okay, yeah. I feel like opportunities to monetize Venmo could be limited. They're saying here. What do they know?
Yeah, well, they
Yeah,
are
I
though.
don't know. Yeah, I'm the one that doesn't know.
Because like, what do you monetize with
Right, the
Venmo? You know.
social media aspect, bro. They should just allow
Also, it's just
people.
I don't like that, by the way.
I
I really
know
think that's like
who
a
does. I don't know what the hell. I guess they just keep it because they had it. I mean, what? I don't even see. Yeah, we talked about this. What's the point? Anyway, is it gonna be hard to find?
yeah.
Oh, damn.
Wait, hold on. It's possible that I actually didn't even write one.
Oh.
One sec. Check my master document.
But then you should. Well, we'll do when we do more research. I mean.
I should. I really should. But will
Ooh,
I?
look at the calls one. What is it doing now? Oh
It
shit.
just stayed at that level.
Oh, nice. Maybe we should buy.
Yes, sir.
Ah, yeah, it doesn't seem like you did. No. Just went through your whole feed.
Let me see.
Well, it's up 10% today.
I really didn't. Well, I mean, yeah, I didn't.
It's still at
It's probably because
12p. Isn't that kind of wild? I
wait,
mean,
no,
yeah.
I did though. I swear, I mean, maybe actually I just have tweets about it, but not like a write-up.
What was that movie company? Like the theaters, the first meme stock thing?
AMC.
AMC. Where are they at now? Oh boy. Yeah, look at that. Shit. They milked it. Oh my god, I maybe got to 230. And now it's at $3. They don't have a PE? They don't make money or what? B. Riley forecasts higher earnings. Stocks making the biggest moves pre-market 2 weeks ago. Is it poised for another run? What is the short interest on this? Oh my god. This stuff. F. Theatrical exhibition. 15% short interest on AMC. Ooh. Wait, should we do a screener on that? Just for fun? On stock base? Wait, did they even have that on short interest or no?
They probably do.
Let's see.
You can just Google a list that you don't need their screening.
But then I don't feel intelligent enough then.
Oh shit, bad. Forgot about that. Forgot about that one there though.
Wait, it's not. I don't think. Okay, let's say short. Oh yeah.
Oh
Short.
yeah, I just made a tweet about it. The stock was cheap at 60,
Mooling Automotive, a
but
220%
it's not.
short
I
interest.
mean,
How is that a thing, bro?
stock is cheap at 60, but it's not cheap at 80, and it's at 77.88. And that for me means that it's not cheap.
Well, calls is still a 47% short interest. Well, still maybe it's
Yeah.
not actualized, but that's wow.
No, it could be like, yeah, it could be from last week or whatever.
We got Mullen. Any of this sound familiar? La Rosa, Beyond Air, BioVi, Lazy Days, Fusion Fuel, Helios Medical Technologies, Banzai,
Well,
Immune.
let's just buy the dip
On what?
on Farcoin.
Beyond Meat. Damn, how are Beyond Meat doing? Let's see, actually.
Oh, you don't want to know, brother.
They're terrible.
Look at their all time. It's the funniest thing ever.
Well, I just meant like I want to check their actual financials, but yeah. Oh boy. Yeah, there was some hype around that, huh? Nobody's gonna eat meat anymore. Yeah, right. I feel like people are eating more meat now than ever.
Yeah, meat really came back.
Yeah. Yeah, look at that. I mean, the fact that they're making that much money still. Yeah. Ew. Boy. Da, 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 da. MF International. Salarius. Ascent. Nuelis. Bone Biologics. An absence. Hims and hers? Wait, Hims has a 30% short interest? Did you know that?
Yeah, it just went up like 19% yesterday.
Why?
Just that's what it does.
Oh, well, the stock is high as hell.
Literally responsible for just all the gray hairs on my head, bro.
Oh, I see.
Thing
I thought you meant because you
thing
take
whips
their
off.
product. You just mean because you take their stock.
This thing whips off constantly, bro. It's insane.
Bro, this revenue growth is insane.
Yeah, yeah, brother. Honestly, the best
Hims
risk reward on the entire market right now is a
is what
like genuinely.
ACMR?
Yeah, it's for sure the best risk reward profile of anything that I've ever seen. Company's insane.
What did they do again? I forgot. Was it the wafer?
They just have fun. They're just a couple of guys, and they're having fun. What I mean, they're moving, they're shaking. They're doing a little bit of this, a little bit of that. They get involved. They get involved.
You're too much, my guy.
They tuck in. They
Yeah,
fuck
wafer.
around.
Wafer assembly.
Wayfair, you have just what I need.
They beat earnings by 25% and then 44 in the past and then 68. Yeah, these people are up to something.
I
Oh,
see
but their
them.
ESG ratings, though, they have a B.
Oh no. Oh no.
Oh, no.
Uninvestable.
Yeah, look at that. You already hold them, right?
Yeah, of course.
Where is their P? Oh, 18. Look at that. Beautiful.
18 times P.
18.
50% plus revenue growth.
Yeah. All right.
That's what we need, bro. None of this growing
All right, we're done. We're done. I
15%.
mean, we're done with the sector. Yeah, we
There
know.
was a down year, and they're doing all this bullshit, and then the P is 19.
Bro, you just.
Garbage.
Nah, it's not garbage, bro. You just caught up in the
It,
fucking Reddits, bro.
it's what
The
what
Reddits, bro. You're a Redditor, bro.
Reddit's? If these guys at Reddit got a hold of HTML
Yeah.
with this market cap, less than 2 billion, this company would be worth like $1,000 tomorrow.
Then we should maybe put it on Reddit. Maybe somebody
No,
should do a
we don't
thread.
want to put it on Reddit because it's gonna make the job so much more difficult. Right now, it's like perfect, bro. They literally just grow. They announce earnings. Somebody writes an obscure article on the internet. The stock goes up 10-15% every time they announce earnings. It's fucking beautiful, bro. That's all I care about. Cause then it's like I know what the fuck I'm holding. I don't have to make a crazy decision of like, do I sell everything? Do I sell some of it? You know what I mean? It's just like it's perfect right now. It just grows.
But can't you
Nobody
just
gives a
do
shit
that
about.
regardless? Just even if it skyrockets, just hold like a boss?
No,
Ideally.
because then the valuation is not good. It's like expensive. And
Yeah,
you
but
could
just
make a
hold it.
mistake.
Just let it go up, come down again, and you just continue to hold it like nothing happened.
No, that's what's happening with hymns. When I discovered hymns, nobody gave a shit about it.
Uh-huh.
That was growing revenue, growing earnings.
Uh-huh.
It was going up nicely quarter over quarter. Then fucking Twitter got a hold of it, and now they have like a Tesla fan base, and the company fucking goes up 20% and down 20%. based on a CEO doing a fucking podcast or something. It's like the stupidest shit ever, bro. And I
But what do
still
you
hold it.
care? Yeah. Why
I
does it
care
take
because
such a
it's like
toll?
every time that happens, I
Uh-huh.
have to go back in and I have to sit down for like 5 hours and decide if the company is still cheap based on these insane swings. And it's fine if it happens once a year that we have an insane swing. This fucking company has an insane swing like once every 2 weeks, bro. And I have to go in and be like, wait, am I like what the fuck are my what's my intrinsic value again? Like I have to go again every time. I have to and do I
Ah,
cut? And how much do I cut?
just be a chill guy, bro.
Don't
Just
say
hold it.
like you're some kind of veteran, bro. You don't know you've never experienced it.
Okay, okay. You're getting tight now? You
Look
relax.
at the chart. Look at the chart of this company. It looks like it's insane, bro. Like look what I've held. Look at what I've fucking held through. I've held through a peak of 72 and a trough of 19.
Oh yeah, I remember this.
You understand? Like
Just
what that
hold,
does to
bro.
me psychologically, bro.
I
This
know,
shit,
I know, I know. I'm just downplaying
this
it.
shit can suck me, bro. I hate this shit. I hate when good companies start trading like it's like the part of the stock market that I try to avoid the most.
Uh-huh.
But when it comes for the companies that I find that I like, then it's like unavoidable, you know? But it's like in general, you should avoid the shit as much as you can. Unfortunately,
I
sometimes
mean, it really has recovered. Damn, now I think about it. I haven't talked about this with you since this trial. You were really down with this, but now it's up here. So now you're probably back on your nightmare of figuring out if you want to sell, right?
yes.
Yes. Okay, okay. Didn't mean to bring it
But
up.
but right now, I'll tell you right now,
Yeah.
it's not it's not a buy. It's not a
Okay.
buy. It's not cheap.
No, definitely not a buy, but is it a sell?
No, it's not definitely not a buy.
No?
It's probably not a buy.
Okay,
It's
okay.
it's
All right.
almost a sell. It's like it's slightly overvalued. It's not insanely overvalued. It's only slightly overvalued.
So if it is overvalued, you will sell. I still don't get why wouldn't it be better to just hold?
If it's insanely overvalued, I'll sell. If it's only slightly overvalued
Yeah.
and I still like the business, I'll just hold it, you know?
Yeah. So what would be insanely overvalued? Let's figure it out now before it skyrockets, and then you gotta figure that out on the fly. Well, we don't
What
have
are you
to
talking
figure it
about?
out right now. But I'm like, what do you think right now is at top of your head would be insanely overvalued? Over what threshold?
One
Oh, okay.
120.
Oh
Double
wow.
there right now.
Double the price of what is okay, wow. So yeah, you're ready to hold. Wow. Yeah, okay.
Would be insanely overvalued.
Okay, okay, got it, got it, got it. Alright,
Once
good.
we get to like the 90s, it gets a little bit sussy. I gotta really like lock in and look at this thing, you know?
Fair. Alright, should we do anything
It's
more
okay.
today or wait, what?
It's a weird one because you always have to you oh my oh
Oh.
excuse me. Oh my god. I gotta eat something. Um
Oh, fair.
no, it's tough with this company because you have to kind of look at their marketing expense. Their marketing expense is a big part of like if you decide the company is
Hmm.
undervalued or not, you know.
Hmm. How so? Like
Because
what do you
marketing
mean?
because marketing right now they make no money because of their marketing.
Ah.
And
But
so it's like a fine line of like you have to figure out if it's the right time for them to start curtailing their marketing or if it's not. And you know, like that's you have to discount it, but not in the traditional way. Like you don't just take it out. You know what I'm saying?
no, of course. But it's just more like you just gotta take it into account, kind of, right? The fact that they're spending so much, is it worth it? Are they spending in the right places, right? Yeah, I mean that's wild.
Yeah,
They grew like what?
yeah.
Yeah, 30%? More, 40% year over year. No? Yes. No. I don't fucking know. Yeah.
90%, but what are you talking about?
No. If their selling units it was 280 million, that's 400. That's
Oh, you're
120
talking about
million.
the marketing expense. I think you're talking about the revenue. Okay.
Oh, no, 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 no. Yeah, it's selling. Oh, yeah, my mouse. Yeah. Okay, yeah. Himsis. All right, anything else you want to do on this one, or we're done with the episode?
No, I think we're good, bro. We went past by 30 minutes.
Yeah. Well, yeah. But should we stay like? Are you trying to log off like your head hurts and stuff, or should we do some fun things while I do the editing and stuff?
Nah, I have to get up because I gotta go. I got a thing at sick in a couple hours. I gotta take a shower and all that stuff.
Oh yeah, is this Zach's thing or a different thing?
Yeah, Zaxton.
All right, we're. Yeah, enjoy, brother. All right, well, thank you everybody. Like and subscribe. Comment what you think. Share the video. Anything else, Evan, for people that made it to the end?
Yeah, if you made it to the end of the video, leave a dislike.
Oh, I don't know about that. I would advise against
So we
that.
know, so we know who watched the video, you know? Just leave a dislike on the video and
Let us know
share
in
it to
the
your family.
comments why you disliked it, though, so I feel better about it.
No, no, you liked it for sure. You got this far, but I'm just saying, like, just as like a thing between us, just dislike it so we can see. You know?
Okay, yeah, do that, I guess. All right, see you guys. God bless you.